Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Grand Rising, everyone. Welcome. Thanks everyone for joining. It's 6 a.m. Eastern. It's Monday morning, September 15. It's halfway through the month of September. First week of school for most of us. And thanks everyone for joining. This is a big week. It is FOMC week on Wednesday at 2 p.m. And so it's the start of the week. We're coming off of some news last week, and the much anticipated FOMC conference is on Wednesday. So guys, again, it could be a volatile week with that FOMC news. So just please, if you can, trade with proper risk management. Hopefully some of you guys already have a trading plan. Maybe you worked on the weekend on your charts, your forecasts, maybe your higher time frame outlooks, and you know exactly what you're looking for this week on the particular security that you are trading. On today's call, we'll go over gold, we'll go over NASDAQ, and we'll go over US30 today, okay? So thanks everyone for joining. I hope everyone had a blessed weekend and you're rested, recharged, and ready to go. We have a couple bonus sessions this week. So I'll go over our weekly schedule, but we will be hosting the live FOMC on Wednesday as well. And we're going to start kickstarting some education for the snipers in Zoom. And this Wednesday night, we're going to have a webinar, okay? So we'll get into that. And guys, hope you guys are all ready and ready to go. I'm going to get started. I don't want to waste your time. We're going to go into Forex Factory and we're going to start to look at this week's news. Again, some of you guys have already done this over the weekend, so I'm just going to help out those that didn't do this. But today we had some news coming out of Europe already. Some German news, Italian news, all low impact news, no high impact news. And then right over here, going into 8:30 here in North America, we do have an Empire State Manufacturing Index coming out. It is an orange folder, so it's medium impact. That's just right after our COMEX market open. And then the rest of the day, we do not have much today. Okay, so just treat it as if what it is. It is a Monday, so we are coming off of a weekend. So markets could be a little bit of stable volume trading today, because we got Tuesday and then going into FOMC. So again, part of your homework could be you could look at the previous month's FOMC and see how it traded on Monday, Tuesday leading into the FOMC. So that's what you can do too for extra work on the weekend. Is if you do have a particular high impact news event, for example, like NFP, FOMC, maybe a CPI event or something like that, you could always back test and look back the previous month to when you had that announcement and see how it was trading leading into it, okay? I know a lot of traders neglect doing that because it is a little bit of extra work, but it could also give you a little bit of forward insights as to how it was trading Monday and Tuesday leading into the previous FOMC, okay? And it's pretty much already been announced. It hasn't been officially announced, but analysts are always forecasting and predicting. So about 97% right now of all analysts are saying that there's going to be a 0.25% basis point rate cut. And about 3% are saying a half point, so 50 basis points. I'm gonna tend to lead to the 0.25 side. So we could have possibly, those analysts are also saying it could be like the buy the rumor, sell the news event. So it could, the price of these securities could be already baked in with the rate cut. And when they announce it, it could be a sell the news event. Normally markets do push bullish if there is a rate cut announcement. In this particular situation, some analysts are saying it could be a sell the news event where the market could sell off after they release that news. So again, guys, we're going to take it day by day, candle by candle, and see. These are just what analysts are saying, predictions. Again, they could do a rate cut and the market continues pumping and there is no sell event. So it's just good to know something in the back of your head while we're going into this, okay? So today, a very light day in the markets, not much going on news-wise. Let's see what's going on tomorrow morning. Okay, tomorrow morning is a busier day. It gets started in Europe, so I don't know if you guys are trading this session. Right now, next couple weeks, I might get into some more London sessions, but for now, we're going to stick with New York, post-New Yorks, and some Tokyo sessions. But if you are trading, there is some pre-London news regarding the pound in UK here. You have your average earnings index, your claimant change count, your unemployment rate. 5 a.m. you do have some Eurozone news, and then we start to move into our trading block that we do here from 6 to 10 daily. We do have lots of Canadian news. You can see there's 1, 2, 3, 4, 5 Canadian folders, and the first 3 are red, high impact for here in Canada. It's our CPI month over month, our median CPI year over year, and our trim CPI. So you guys remember we went over these folders in our blog. We had CPI and PPI last week in the US, so now it's Canada's turn to release their consumer price index information over here. And then we do have 2 US folders as well. We have our core retail sales month over month. It looks like there's an increase in their forecast from 0.3. That was the previous month core retail sales, and it's looking at 0.4, so it's an increase of 0.1 in the forecast. We'll see what the actual number is tomorrow. We also have retail sales month over month. So you know the word core. When you see the word core, it has to exclude something. It means something excluding. So if you click on the folder, you will see the core retail sales change in total value of sales at the retail level, excluding automobiles. So when they give this reading, it will be excluding automobiles. And then the next reading, retail sales, where you don't see the word core, that will include automobile sales, okay? It's a way how to eliminate some noise. Like when they have CPI, they have core, which excludes food and energy, right? And food and energy is like what we consume the most. And they have one reading where it takes it away and one reading with it, okay? Kind of skews the numbers is what the analysts say. So whenever you see that word core, just know in the back of your mind, it is excluding something, okay? And then we get through, we go into Wall Street. 10 a.m. we do have little low impact business news. And then the rest of the day, we have some New Zealand and then some Australian news, Tokyo news in the futures market, okay? And this is all leading into FOMC, because FOMC, please guys, is right over here on Wednesday, okay? So if you can all circle this on your charts right here, it's midweek, 2 p.m. Eastern is the biggest folder, okay? But prior to going in there, again, if you are trading in Europe prior to FOMC, you do have some pre-London British CPI year over year will be coming out. Also at 3:30 a.m., you have your ECB President Lagarde speaking. And then we move into a German 30-year bond auction. Coming into North America, we do have some Canadian US housing news, building permits. 9:45 during Wall Street, Canada over here, they have their Bank of Canada rate statement and their overnight rate. It looks like Canada is also factoring in their forecast, 0.25% rate cut right over here from 2.75 to 2.5. We'll see what Canada does during Wall Street market open. And then 30 minutes later, we have our Bank of Canada press conference at 10:30. Okay, and then continuing, every Wednesday you have your crude oil inventories. These are your weekly inventories. If you're a crude oil trader, you should be paying attention to the supply and demand on a weekly basis of crude oil. With everything that's going on around the world, this can change every week, okay? And then finally, guys, we have the big FOMC meeting. And this is a different one because this one also has the economic projections. Some FOMCs do not have economic projections. This one does, okay? So this one is a really, really, really important FOMC. Number one, we have our federal funds rate. So you can see US is sitting at 4.5% right now. The forecast is a 0.25% decrease, 4.25. We'll see what the number actually comes out. So if it's a 4.25, the actual number, we know that they decreased by half a quarter percent. If it comes out 4%, 3% of analysts are saying they're factoring in that it could be a dramatic decrease to, and it's a 50 basis point cut to, and then we'll see here 4%. Okay, I'm gonna tend to stay on this a quarter percent. If they do 50 points, that will be big for the markets. Okay. Then we could have that not sell the rumor event. It's continuing to pump if it's 50 basis points here, and maybe we'll see most index securities go to all-time highs or even higher in the near future, okay? So that's what we'll have. We'll have the number come out. They'll release the federal funds rate. Then after that, we have the FOMC economic projections. If you don't know what this is, if you click on the folder, this report includes the FOMC's projection for inflation and economic growth over the next 2 years, and more importantly, a breakdown of individual FOMC members' interest rate forecasts. So it's the primary tool the Fed uses to communicate their economic and monetary projections to investors. So that will be coming out over here as well. And there's no numbers attached, okay? It's just projections. It'll be in a statement. And then we have the actual FOMC statement. And then 30 minutes after, once they release all those numbers, projections, and statements, it's then at 2:30, this is where Powell will now come to the podium. And this is where he addresses all of this. So he'll discuss why they decided on either a pause, rate cut, or a rate hike, and either a 1/4%, 0.5%. He'll talk about it. He'll talk about these economic projections in the future. Okay, so this is kind of like giving forward guidance as to maybe what we want to listen for is how many more rate cuts will he do going for 2025, because we have about 3 more FOMCs to go. He might say that there could be, he might hint that there might be more reductions to come at the next FOMCs, okay? So this is where we got to kind of listen for forward guidance. His tone, is he more hawkish? Does he sound dovish in his communication when he's giving this guidance? Then after that, he takes questions from the press and the audience and answers all of those, okay? So it is a big one. You can see there's 4 high impact folders. The first 3 will be released at 2 p.m. And then Powell is also a high impact event himself speaking, okay? And this is where you really want to use proper risk management because it could be very volatile right here, okay? And then when that day is over, we go into the after hours and market close, and then we start kick things off in Australia, New Zealand, and Tokyo. And you can see that New Zealand has GDP quarter-over-quarter high impact. Australia also has their unemployment rate and their unemployment change. Okay, so that's Wednesday, 2 p.m. We'll host that session for you guys. As long as we get enough likes on YouTube here, we got 200 viewers. Guys, but thank you for joining. If you guys can kindly hit the like button, we do appreciate it. Subscribe to the channel so that we get enough viewership, and we're pumped to do the FOMC with you guys on Wednesday, okay? And then just moving into Thursday of this week. So this is now post FOMC. We see the market reaction, how things move from Europe coming in back into New York. Europe has a few things. They got their Spanish 10-year bond auction. Again, ECB President Lagarde speaks again. This is all when the London market opens up. And then 7 a.m. right over here, when we're looking at the North American markets, the UK also has 3 high impact folders right over here. They have their monetary policy summary. They got their official bank rates, and then the official bank rate looks like from 4%. They're in the forecast. It is looking at a pause right now, 4%, but we'll see actual numbers when they are released. Then we have our weekly U.S. unemployment claims week over week. Remember this number, this was a dramatic increase of over 30,000. They've kind of revised some numbers over here. But this previous one was 230,000, if I'm correct, and it came out 263,000. So it was about 30,000 plus above, which is telling me that 30,000 more individuals week over week have applied for unemployment benefits, unemployment insurance, are out of work, seeking work. Again, when you put unemployment numbers going up. And then we look at the job creation from NFP, and they're not creating jobs. The job creation is decreasing, actually going into the negative. And with inflation and everything like that, you put it all together, that's why there's going to be a rate cut coming up in this FOMC. That's why it's pretty much already baked in. We can't say 100%, but that's why some analysts are saying it's buy the rumor, sell the event, because it's already in there, in the price, okay? But again, we'll take it day by day, candle by candle, till we get there, until we see the results. So this week, they're forecasting from 263 from last week's numbers to 245. So you can see it's about a 20,000 decrease in the forecast. 245 is still a lot, but last week was pretty dramatic. So we'll see. Like, they're forecasting 245 in the unemployment. What if this number comes in 275, for example? It's 30,000 above their forecast, and then it's another 12,000 above last week's high numbers. Then you can really start to see unemployment starting to go up, and that's not healthy for an economy. You want to get unemployment numbers down. And right now they're slowly increasing. This didn't just happen last week. We've been watching this for the past couple months, and we're seeing week over week increases. Okay, then we have our Philly Fed manufacturing, and then going through here, 10 a.m. Wall Street market opens up, and you do have a little bit more news. And then also, then the other side of the world, later that night, then when the Tokyo sessions open up, Tokyo markets, Japan, they have their Bank of Japan policy rate and their monetary policy statement. So you can see it goes Canada, US, New Zealand, Australia, Japan, UK. It's global, guys. So we'll see everything, all of these things, how they start to unfold this week. It's a pretty impactful week. It's not just FOMC US. There's a lot of other high impact news for every financial market around the world. Okay, and then to finish off Friday, hopefully some of you guys might hit your weekly goal and maybe be done on Friday and take a long weekend. That's the goal for all traders, is to maybe get there so you can decide whether you want to trade a Friday or not. Most retail traders struggle on Fridays, so it's great if you guys can hit your weekly goal and not even trade a Friday. Then you can enjoy yourselves a nice long weekend. That's the goal of trading. Hopefully we can all get there one day, okay? And you can see Friday also has the Bank of Japan press conference, and then we move into some European news, and then when we get our North American market on Friday, not much going on, okay? So big folders are Wednesday, FOMC, and if we look at earnings this week, okay, it's not just FOMC, there's also earnings this week. Let's go through this week's earnings real quick from Monday to Friday, pre-market and after hours, and maybe highlight which days have those big names. Right now, this is today in the pre-market. I wouldn't be too concerned about Hang, Celestial Group, Mindwalk, Coda, Octopus Group over here. I don't think this is going to move the S&P, NASDAQ, or Dow Jones. They're there if you're trading them, buying shares in these companies, or through an option chain if they are available. But I wouldn't pay too much attention to those pre-market earnings today. After hours, we got Dave & Buster's Entertainment. Great place. Go for a drink, have some fun, play some arcades. My kids love Dave & Buster's. Great place over here. High Tide, Champions and Oncology, Ocean Power. Again, I don't think these securities are going to move S&P 500. So let's look at those familiar names those household names that we know about. Tuesday before the open, Ferguson, Brand House Collective. Again, I just look at them. I've nothing to really highlight here, so I just keep moving forward. Then I look Tuesday after hours, Evolution Petroleum Group. Okay, so if you do trade any crude oil securities, you do have a petroleum corporation right here. Maybe you want to take a look at that. If you do trade oil, maybe you want to add something else in the stock market to your list, you can add that. And then we move into Wednesday, which we know is FOMC, but we do have pre-market earnings that morning. General Mills, the cereal company over here, reports. Manchester United, to all of our football fans in Europe over here and in England, Manchester United is a publicly traded company. You can buy shares of the company and be a shareholder of this. Not sure how Manchester is doing. I know that they fell off a little bit, but maybe if we got anyone from the UK here, let us know if you're a Manchester fan. That's your team, Wayne? Yeah. We have a lot of Liverpool fans over here and Chelsea fans. So they won yesterday. Yeah. Yeah, you can. A lot of traders didn't know that. You can actually invest and be a shareholder of Manchester United. If they're not doing too well, it might be an opportunity to short Manchester United. Yeah. And just going through this list again. So that is Wednesday. That's pre FOMC. Let's see what's post. Cracker Barrel. Okay, remember we were talking about this. Cracker Barrel was in the news. They changed the logo. Share price dumped for like 10-20%, and then they put the original logo back, and maybe it might be a time to return the price back up. But they have their earnings. Cracker Barrel. Look, there's a company called Bullish. Maybe we need to add Bullish to our watch list. And looking at over here then, Thursday pre-market, Darden Restaurants, FactSet. Again, these are not going to move S&P, Dow, or NASDAQ. I wouldn't pay particular attention. I see a lot of traders get stressed out when it comes to earnings. They don't know what to pay attention to. Those big names. Do you see Tesla, Facebook? Do you see, Meta? Do you see NVIDIA? Do you see Microsoft, Google? Do you see Amazon? Do you see Apple? Do you see Bank of America? Do you see JP Morgan? Do you see like those big names? Those are the ones that we want to look for. Walmart's, Costco, Home Depot's, those ones that consumers shop at on a daily basis. So those are the ones we're looking at. Here's one, like here on Thursday after hours, FedEx Corporation. Okay, so this is a company that delivers packages and products to you. There's UPS, FedEx. It looks like they're kind of falling off as of late. Some other companies have taken over deliveries. So FedEx is reporting. We'll see how they do. And then to finish off, going into Friday. Fridays are always usually a light day for earnings, wrapping up the week. You can see there's just Money Hero Limited in the pre-market. There's probably nothing in the after hours. Yeah, so there's nothing in the after hours. So this week, earnings-wise, nothing to really consider. It's more so the FOMC this week, okay? And just in the news right now, U.S. stock futures tick up ahead of the big Fed meeting, what I was just talking about. So the Dow, S&P 500, and NASDAQ futures are holding patterns after record-setting runs. China finds NVIDIA broke antitrust law in an initial probe. So now we got some news regarding NVIDIA over here developing. Right over here, this is Mr. Powell, if you guys don't know what he looks like. The Fed is set for its first 2025 cut, but will it keep going? So that's what I was talking about earlier. So it's pretty much baked in that they're going to cut quarter basis point. But this is more important, the forward guidance. What is Powell going to say? What's his tone? Is it going to be giving in the future guidance that more cuts are to come, or we're just again going to take it day by day, see the job numbers, see inflation and all of those things, and maybe kind of just a rate cut and then hold off. So we want to listen to his tone. His forward guidance. That could really dictate how the markets move forward for even the rest of this year, okay? So it's very important that we also listen. Sometimes when we're trading live, we can't really listen too much. It's a lot going on. So what I would suggest after, maybe when that day is over, you're done trading, later that evening, you can watch this. You can find the link and watch it. Sometimes it's about 30 to 45 minutes, and you can listen to the whole press conference. You can also speed it up, put it to 2x or 1.5x. You'll hear Mr. Powell speaking very fast, like normally, like when I do when we're scalping the markets, but at least you can get through that in maybe like 20 minutes, so you don't have to waste your entire evening. But it's good to listen to, okay? Because it could help you with your forward projections for the rest of the year, okay? US-China talks kick off second day with trade in focus. That's very important. US and China are two of the powerful countries in this world. So hopefully they can come to some trade agreements and we can get back to normal markets. Oil edges up after attacks on Russian energy facilities. So if you're a crude oil trader, you know you're having your news over here. Anything attacks on oil and energy could affect the price of barrels of oil directly impacts the supply and demand. Okay. What else we got over here? US is close to resolving their TikTok issue with China. You know, Trump is calling for a ban on TikTok in the United States over here. So we'll see what's developing over there. Traders look past Fed to jobs data for volatility. What else we got here? Okay, so that's pretty much it, what we got. So it's all about Mr. Powell and FOMC this week. In the pre-markets right now, we have S&P futures are up 0.06%, Dow is up 0.23%, and NASDAQ is negative 0.1% right now, okay? So just moving forward, guys, just chugging along here. We had some trade signals sent out on Friday. Here's one on the sell US30, which hit approximately over 200 pips over here. So again, looking for sells below 46,050. There was a candle that closed below, came back up to retest, was kind of consolidating, bear flag, came back in here, then rejection, 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 rejection. So no volume closing like above 46,050. And then after all of that sideways consolidation, then they did redistribute it to the downside for approximately 200 pips. So if you got that, congratulations. And you can see there was that big bullish run right over there. If you kind of pinpointed kind of the point of control of this big body candle, you'd see that, you know, right in there it traded basically. I don't even need to draw my box. I can see it right across there. It's about 50% of that point of control. Again, if you're a seller, that could be an opportunity for you to bring your stop loss to break even and start to take some partials or close majority of your position right into that point of control where the buyers are, okay? So it's just heads up. It's helpful, so you know exactly from point A to point B what to do, how to reduce risk management in the trade, and ultimately take some profit out of the market so that you can compound your account. You don't need to close your entire trade, but you can take some partials out, okay? So we'll keep up with this. We'll see if we get any signals today in our session. And also over here, guys, there's a free Telegram pinned at the top of the YouTube channel for you guys. So if you want to join this, it's a free Telegram channel. It's right over here. You get all of our links to all of our live YouTube sessions, plus everything else we do around here. This is Ronnie Montana over here, eating pancakes and with the Tim Hortons coffee over here. So this is a blog on back to school. You know, some of us already sent our kids back to school, and I was saying that some of us as traders, it's time for us to go back to school. So we're going to have a Wednesday webinar this week. I'll go over this week's schedule, but there's also a blog I'd like to read for us before we kick off our day today. It's still early. I like to do these blogs, you know, we did it all last week. We did blogs on CPI, PPI, get us in the know, get us to a little educated as to what the news actually is. I'll do one tomorrow. Maybe we'll get ready for FOMC, things like that, break it down so we can learn a little bit about it too. Most of you guys are very familiar with what these are, but some traders are new and have no idea, so we like to give them quick little backgrounds, okay? And also this, for over the weekend, guys, you know, this was sent out on the weekend. So what it was saying was it's a great day to plan for higher time frame charts for the entire week ahead, build and analyze your top-down analysis. So let's see on our Monday morning session if we have matching zones, points of interest, and similar point of control. So if you guys can get in the habit of doing like your own top-down analysis on the weekend, then when we get together to start the week, maybe when I start doing mine, you can start to maybe match up with mine, and maybe we can work off each other. We can see, do we have similar points of interest? Do we have similar points of control? Are our zones very similar? And then this can help give you the confidence to do this on an everyday basis with the help of SST, okay? Particular timeframes to focus on is obviously your daily, your hourly, either your 4H or 1H, and finally, if you go down to your minutes, either your 15-minute or 5-minute, okay? Stay with higher time frames if you are more of a swing position style trader, and the lower time frames for intraday or scalp style trader, placing emphasis always on higher time frame zones, points of interest, and points of control. Okay, let's have a great week ahead, trading the much anticipated FOMC on Wednesday. So that's why it's good to be part of this free Telegram. We do give you a lot of things throughout the week. Appreciate everyone on YouTube with their comments, and we give also recaps of our trade ideas and setups, so that can help you guys understand that we don't just do live trading here. If you do need trade signals setups, we do offer those as well, plus education and then the Discord that we have here. So this is the free Telegram. If you guys wouldn't mind joining it, it'll benefit you guys, no cost to you. This is our website again, stocksnipertrading.com. We're now going to get started with education, guys. So everyone in Zoom, we're going to resume with some Wednesday webinars. And also we're going to resume not next weekend, but the weekend after on Sunday with our lifetimers. We're going to go back in our Sunday morning lifetime sessions. Next week, unfortunately, we won't have it, but the week after. I will be in Chicago next weekend. I'm leaving Saturday, Sunday, and I'll be back late Monday. I'm going to Chicago to have some deep dish pizza and to watch the Dallas Cowboys versus the Chicago Bears. So if any snipers are around Chicago, I should be downtown Fairmont coming in, and I'll be around downtown, and then we'll be at the Bears and the Cowboys game all next weekend. So Monday morning, guys, I'm probably not going to be here to stream with you guys. It might be maybe a Monday late night session if I do get back in time, or we'll just resume Tuesday morning and Monday will be a day off, okay? Big crazy game with the Giants and Cowboys last night. That was insane. So we'll see what happens, guys. So lots of education and our live sessions this week. If you make note of our schedule, okay, so we are Monday to Friday, guys. We'll do our New York sessions. Dave comes in post New York, Tuesday, Wednesday, Thursday. And then here's our live FOMC on, so we'll come in right after Dave. Maybe Dave will wrap it up a little earlier. We can get started FOMC analysis from maybe noon till about 3 p.m. So we'll cover that whole FOMC event. And then this Wednesday also 7 p.m. guys. Wednesday is a very busy day. We'll have our first back to school class where we're going to talk about the TradingView toolbox and common indicators. Someone was asking me, Ron, can you go over your toolbox? Which tools do you use? And I thought that was a great way to start back to school. You know, when my kids go back to school, my daughter in grade 4, teacher said she needs a pencil case. She needs to have these certain pencils, markers, erasers, rulers, all of these things. So we had to go back to school shopping, buy all those things. So this is a great way of how we can get started with our back to school, our tools, our things that we need for trading. I'll go over all of these. I'll break them down. Okay. So it's a good little review class on TradingView Toolbox and some common indicators to help us get started going back to school. So guys, I would love if you guys can join me here. I love these education classes. Very passionate about teaching how to trade, not just live trading. So if you guys want to join us, more than happy to have you guys. This is our free blogs over here on our website. So if you come to our website, click on more blog, you can see we celebrated 85,000 subscribers. Thank you guys so much. These were the previous week. We talked about CPI, Consumer Price Index. We talked about PPI, Producer Price Index. We'll revisit these next month. So there's a little bit of education regarding them. Here's our weekly market outlooks that are released on Sundays for members. And also, guys, here's the back to school one. So this is what I just want to go over. So we're mid-September now. Now we're back to school trading, stepping up your game with SST. So as summer waves goodbye, I know it's waving goodbye to me. I had a lot of fun this summer on the beach, but now it's gone. It's getting cool at night. The cooler breezes of September beacon. We find ourselves in a season of transition. For students, it's time to trade beach towels for backpacks. You get it, guys? Trade beach towels. See, they're trading beach towels for their backpacks. So, and leisure for learning. In the world of trading, this period mirrors a similar shift. So this is for us too as traders. From the often slower paced summer months into the vibrant rhythm of the fall market. Here at SST, we're ready to help you embrace this change by reigniting your passion for education and sharpening your trading skills with our renewed focus on learning. So over the summer months, a lot of traders don't learn anymore. They don't educate themselves. Summertime is busy. So we're here to remind you guys education is very important, and we're going to reignite it with our webinars coming back, okay? So the summer lull in trading, traditionally summer months, June, July, and August in the financial markets are very slow. Liquidity is a little lower than usual, more erratic trading. So now it's time to really kickstart our trading. September, October, November, going into Santa Claus rally and the new year could change up everything. So that's why, guys, it's very important that you learn how to trade. Some of you guys navigated the summer months really well. Some of you guys really compounded your accounts. That's fantastic, because summer months are traditionally the hardest months to trade. And if you guys went through those summer months and you guys came out on top, you guys are well on your way, okay? And for those traders that struggled trading those summer months, June, July, and August, again, they are tough months, but they are great for learning, okay? Just as students enjoy their well-deserved break over the summer, traders too often experience a lull during these months, with many institutional investors and key market players taking time off. So this is not just you and I. We're not market makers. We're not going to move the markets. But traditionally, a lot of institutional big investment firms, banks, hedge funds take summer months off. They're on their yachts. They're on their billion-dollar yachts, and they're in Monte Carlo. So trading volumes tend to be lower, leading to less volatility and fewer opportunities. This quieter period provides a perfect opportunity for reflection and preparation. It's the ideal time to review past trades, reassess strategies, and set goals for the rest of the year. September, a season of renewal and opportunity. September heralds not just the start of school, but also a return to more dynamic trading conditions. Volatility typically picks up as market participants return full force, bringing new trends and opportunities. Just as students gear up for new lessons and academic challenges, traders must also prepare to navigate the evolving landscapes of the financial markets. This is where SST steps in. So this is what we do here. We really educate here. So this is what we're proud of. We're excited to announce the launch of our live webinars and Sunday lifetime sessions. These educational offerings are designed to equip you with the knowledge and strategies needed to thrive in these bustling market conditions. Whether you're looking to refine your technical analysis skills, understand market indicators better, or develop advanced trading strategies, our sessions together will provide the guidance and insight necessary to elevate your trading performance. Embrace lifelong learning with SST. Some of you guys are lifetimers with us. You guys are going to get old with me here, so hopefully Ron can continue educating here. I don't get too old and get gray hairs over here, but education is the cornerstone of success, both in academics and in trading. Just like students who sharpen their minds with each lesson, traders grow stronger with every piece of knowledge acquired. Continuous education helps you stay ahead of the curve, adapt to market changes, and make informed decisions that enhance your profitability. So you see these students are back to school, they're on the charts, they're learning. Here's a thought to ponder for everybody. Investing in knowledge always pays the best interest, okay? So investing in yourself, in market knowledge, that will pay the best interest down the road, okay? So it's a great investment in yourself. Don't look at it as it's a waste of time. It's not. If you guys are all here, obviously you guys are all traders. So the more we learn about these markets, the more we learn about FOMC this week, it's going to help us become better traders going into next FOMC and next year. So hopefully you guys do take your education serious. I know that those that are taking it serious will become very, very serious traders down the road. Okay, I take my education very, very, very serious. That's what helped me learn a lot about the markets. Okay, I'm still learning by the day. I tell everyone I'm a sponge. I'm a student to the game. I will always be a student to the game. Okay, if you're trading, every single candlestick can be a different candle every day. So you got to be learning. What you learned 20 years ago might not work today. So you got to always adapt with the fast moving financial markets, okay? So financial education is crucial because it empowers individuals to manage their finances effectively, build wealth for yourself, and secure your future. Understanding market mechanics, identifying trends, and managing risks are fundamental skills that can transform your trading career. So this is our commitment to your growth. At SST, we believe that an educated trader is an empowered trader. Our community thrives on having access to top-notch educational resources and a supportive network. As we dive into this new season, we encourage you to take full advantage of our upcoming live webinars and Sunday lifetime sessions. Engage with our expert instructors in Discord, participate in discussions, and collaborate with fellow traders. Remember, the market is a relentless teacher, and those who continuously learn will always have an edge. So just continue with your learning, guys. We're just getting started over here. September signifies a fresh start. Let's embrace it with vigor and commitment. As students return to classrooms, let us return to the charts, the strategies, and the lessons that will shape our success. Together with SST, let's make this season a transformative one in your trading journey. So happy trading and welcome back to school, everybody. I'll be your instructor, Uncle Ron over here. I'll help you guys out. I'll help answer any questions you guys have. So hopefully we can figure this out together. And we're one team here. We win together, we lose together, we all learn together, okay? So let's continue with that. And all of the other blogs are all available here, guys. Sorry I didn't go over the education, but since we're here, there's a lot of courses, guys. There's a lot of courses on here. There's full form boot camps over here. These were 3 to 5 day boot camps. We have over 120 webinars. They're a minimum two hours long. So we got the beginner level where to get started with the first 10. The next 20 are more intermediate level, and then the next 100 are more advanced level. I'm gonna start our SST Super Systems of Trading again. It's kind of got some dust on it from over the summer months, but we're gonna take that dust off and we're gonna get back into here. And then our Sunday lifetime coaching sessions, we'll have those our bi-weekly Sunday sessions with the lifetime crew, and you guys are going to be the ones that are going to dictate what we do on Sundays. I'll dictate all of the webinars over here on the weekly basis. That will be my job, but your job as the lifetimers here, each day, maybe each trader has anything specific to go over, we will go over it with you, and everyone else can listen, and everyone will have their opportunity to have their own session with me, okay? So that's how I kind of want to go things. I want to do things with more structure this year, because sometimes we just go with the fly, but I don't want to do that anymore. I want more structure so that we know exactly what we're getting every single week here at SST. Okay, and guys, let's get started. So thanks everyone for joining YouTube. We appreciate you guys. If you guys can kindly hit the like button, we're almost at 300 viewers, and subscribe to the channel if you haven't. Okay, it doesn't cost you anything. It helps the channel grow. It helps you grow. Subscribe to this and hit the notification bell, because your crazy Uncle Ron will come on at any time throughout the day and you have no idea. Sometimes I wake up at 2 in the morning and I might do a live London. Sometimes it might be pre-New York's this time. It might be post-New York's. It might be Tokyo sessions for some webinars. Whatever it is, make sure you're subscribed, okay? Let's get started, guys. So I'm going to get started on gold, okay? We're going to get XAUUSD, and then we're going to move over to NASDAQ and US30. So let's get started, guys. It's 6:40. We still have a lot of time. We're here for 10 a.m. and we'll get ready for our COMEX market, and we'll get ready for Wall Street, okay? So good morning, Grand Rising to everybody. Welcome, Justin, good morning. Thank you for joining. Welcome, guys. Nigel, welcome. Conrad, Emmanuel, thank you for joining. Mikey, Samuel, Wayne, SSDN, welcome, guys. Good morning. Trevor, welcome. X-Red Clues, welcome, welcome. Thanks for joining. Hope you had a great weekend. Welcome, welcome. Zizi, welcome. And to everyone on YouTube as well. I don't forget you guys as well. Thank you guys for joining. Moonlight, welcome. Kagisu, welcome. Thank you for joining. It's My Time, welcome. I like that name. Aetherium Lux, welcome. Has Been, welcome. Welcome. Andrew, Carla, welcome. Justin, thank you for joining again. Okay, guys, so let's get started. Did you guys already do a little bit of charting over the weekend, or you didn't really put any work in? So how many of you guys put some work on the weekend, did some forward forecasts on your securities? Did you guys do any top-down analysis? Did you guys mark out your zones, points of control, points of interest, or no? Remember, that was why I sent you that message on Telegram on the Friday. to get you guys to continue to do this so we can learn together, okay? Jason, the charting helps so much, doing it before the week. Absolutely, absolutely. You want to do these forecasts, okay? It's just like a weather forecast. You know, I'm looking right now next Sunday because I'm going to be in Chicago. So I'm looking because it's Soldier Field. It's outdoor. You know, normally I've never been to Soldier Field. I've been to Lambeau Field in Green Bay. That was during December, and it's kind of like cold Canadian weather there, where it's like -20. So I was looking at Chicago. I was looking at the forecast, forward forecast. I know it's for next Sunday, and the weather people always get it wrong, but it's showing that it's 21 and it should be sunny in Chicago on Sunday. So that's beautiful. So, but also in trading, we can do a forward forecast. You know, we can start to forecast where the market could move by next Wednesday, by next Friday, right? So you want to kind of pick out your zones, your points of control, your points of interest, where the market could potentially move. So a great top-down analysis can start to set you up for your success. If you fail to do any type of analysis, then you could fail as a trader, right? So you want to at least do this prior to trading. Hopefully you can do it on your weekend and have everything ready for when you start, okay? So here's gold, okay? So you did all above, Justin, perfect. Lee, you did your weekly review, amazing, okay? That's very important too, guys, to review your journal, to see your past trades of the week. Look at your winners, figure out what you did correct and how you can mimic that again in the future. We're all going to take losses here, so let's all be honest with each other. We're all going to get stopped out of these markets, but we can learn from our losses. We can learn from our stop outs how to do something better. What was it that caused us to get stopped out? And if you have a break-even trade, you can review your break-even trades as well, okay? So there's a lot you can learn from just going over your previous, reviewing your last trades, okay? And having a journal with your thoughts, your emotions, how you're feeling that day, were you sick, were you tired in your trading? All of these things play roles in our trading, okay? So, but if you kind of jot things down, then you understand, maybe if I am sick and I can see 2 weeks ago I was sick and I had a bad trading day and I was tired, maybe the next time I feel sick or I'm tired, maybe that's a day to take off from the markets, because I can see I have a pattern of maybe having bad days when I'm not well rested and I'm coming trading these markets. So those are just little hints and clues to help you with your trading, okay? So I'm gonna get started on the daily on gold. Let's start reviewing, okay? So you can start to see it's now consolidating near this all-time high. Again, we've got a flag. FOMC is big this week. Will it continue driving for new all-time highs, or are we going to start to maybe see a retracement, a pullback, and some selling on gold, okay? So some key areas just to talk about. We had this previous all-time high right here, which hit on April 22nd, and we hit 3,500 over here in the Forex market. So I'm just going to highlight this to show you that was previous all-time high, and now you can see that there's a body of volume actually closing above it on start of the month of September. Monday, September 1st was the US Labor Day bank holiday, and then we picked things up on the Tuesday, September 2nd, and you can see gold has not looked back since the start of September, trading at these all-time highs. Zones. This was always a supply zone that we have been looking at. If you watch any of our previous videos from a couple weeks back or months back, you will see that I defined those two candles right there, and I started to stretch this same zone into the future. So there's where I can see a double top come in and go back down. I can see a third time it came in here with that wick and it pushed down. I can see a fourth time it came in there, kind of faked out and went back down. A fifth time it came in here again and it went back down. Here's a sixth time it came in here and went back down. So you can see it starts off as resistance, and over time resistance can start to turn into supply. Over time, more offers and more offers and more offers and more sellers are coming in. That's what creates supply in the market. Now when I stretch this zone into the future, I can see I have a blue candle close above at the end of August on a Friday. So as soon as it closes above, then my zone, which is static, the size of the zone does not change, the color just changes. Now it's to illustrate that this could be buyer's depth of market to show that if we ever pull back in here, now we flip the zone. If it ever comes back to retest, this could be an area of support. So if gold was ever to come back and, break that orange line and come in here, this could be a big area where there's buyers situating themselves, positioning themselves to get filled, because the market of gold has not came back to revisit this zone since it closed above and broke out. So it's had a very parabolic move to the upside to new all-time highs, but has never retraced in here. So with the green box, what I'm trying to say is in the future, right? Like future forecasts, like when the weather network can tell me what the weather is going to be in the next 2 weeks. They're not always correct, but it gives a good forecast. So we can be a little bit more higher probabilities than a weatherman. So if it comes in here, the weather could be buying weather at 3,400. It's a nice psychological price. So if it comes in there, it could continue to go back up. So one thing to do is maybe set yourself up for success in the future by placing a line either at the top of the green zone, at the bottom of the green zone. I like to go right exactly psychologically right in the middle. So what I do is I place a line. If it's a daily line, I go yellow. I can right click it with the package I have on TradingView, add an alert here and create it. So that alert is created with no expiry date. So if it comes down in here next week, I'll get alerted. If it comes down in here in 1 month from now, I will get alerted. If it comes back in here next year from now, let's say it's next September 2026 and gold still hasn't came down in here, okay? But what it will do is give me an alert when it comes in here. I don't have to buy blindly out of here, but it gives me an alert to watch how that block develops down there, okay? So we are nowhere near this block right now. Again, get in the habit of stretching it into the future, maybe placing your alert in there. Now, I'm not gonna chart anything down here, okay? We've already done a lot about that. We talked about that bullish flag zone, how to find a zone. We talked about barcoding. We talked about the significance of those tweezer bottom lows on the daily. We talked about the significance of this trend continue to make higher lows off the bottom and continue to drive. So now what we got to do is start to focus more on what's going on up here. Okay, so can we identify an all-time high? Yes, we can. On this day, September 9, we hit a new all-time high. So what I'm going to do is just change this orange previous all-time high right over here. I'm just going to make it now just as a regular daily point of interest. So I'm just making it yellow. Again, if I want to put an alert, it's exactly at 3,500. There is a little bit of a bullish fair value zone right below it. You can see from that wick to that wick, if you do this style of identifying a full a bullish fair value gap, that's how I do it right there. You can see the wick and the previous wick. There's the full body candle that did close above. So you're getting a little bit of the meat of that candle regarding the wick and the wick. So there's your zone right there. Again, if you like that area, you can place an alert in there. Okay, just utilize the line, 3,500, right click, add an alert. So now I'm alerted. So maybe that will be a higher low block. You see, if we're coming back down, like let's say gold sells off, maybe it revisits this area and goes back up. Maybe it doesn't come all the way deep down into this one, right? That might be the first supporting area that when it comes to 3,500, it retests that previous all-time high. If it breaks there, then comes into the bigger, deeper demand. This is the bigger discount. Bigger buyers could be down in here, okay? So they all have levels, and each one has significance. The higher time frame they are, the more weight they hold, right? So that's one way of determining if a zone, okay? You can literally see the wick and the wick. There's another way how to determine it. It's the way how I normally do it. I grab my Fibonacci tool and I go from the opening balance of the candle and I go to the closing balance of the candle, and right there, there's your fair value zone. Notice that I changed this indicator, okay? Let me just show you this RSI indicator. I kind of just changed it. So you see what I did there? On my settings, I have the 0 to the 1 or the 1 to the 0 just where I'm placing it. And then you see how I have the 618 0.5382. So it pinpoints my zone exactly right there. There's my zone, okay? You guys understand that? Right there. So the way how I did that is if you go to my settings You see I have the 0 checked off, I have the 382 checked off, I have the 618 checked off, and the 1, I took off I unchecked the 236, I have the 0.5 checked off, and I unchecked the 786 and the 1.618, okay? This is just looking for that point of control, so I kind of fixed up my Fibonacci tool to just figure out where that kind of point of control is, okay? So going back over here, now I can see we did hit a new all-time high. Let's recognize where it is, okay? And orange line again for all-time high, 3,675, that psychological level, psychological number. So we talk about those 25-point increments, right? The FOMC this week, how much are they looking to decrease by? 25 points or 50 points? Psychological numbers, guys. They're not decreasing it by 0.29%. They're doing it by 0.25 or 0.5. They're not looking to decrease 0.56. Why? Like, do you see how the market, or if there was 0.75% or 1 whole point, okay? So that's how markets work, guys. See here, look at my zones. Like, look at the points of interest, 3,400. Look at the next one, 3,500. I could continue to go up 3,525, 3,550, 3,575, 3,600. 36 and a quarter, 36.50, and look at the all-time highs, 36.75. If we continue to break out, it has a high probability it wants to go like a magnet to 3,700, right? It's a live auction. We talked about the efficiency of an auction, how it transacts at these locations, okay? The markets want efficiency. The more efficient they are, the more transactions that can be made, the more volume that's accumulated. You need a lot of volume in order to move gold to continue to break all-time highs, so they can't slow down the transactions, right? Think of like a drive-through when you go buy your local coffee. If the coffee is $2 exactly, you give 2 single-dollar bills in the US or a toonie if you're here in Canada, and you get your coffee and you keep going. You keep the drive-through running efficiently. The coffee shop makes more money. I'm happy in the drive-through because I want to continue just going through, grab my coffee. I don't want to be waiting behind someone to exchange change and slow up the drive-through, because then I'll be behind you and I'll probably be honking the horn, say, hey, come on, what are you guys doing? Like, grab your coffee and go. But that's how pending orders in an auction work, right? So it's gravitated towards those psychological numbers, okay? So you guys are learning all about that aspect as well with your trading, okay? So it's not always just about candlesticks, you know? You got to also understand how auctions work and things like that, okay? Now, see this big body candle right over here that took us to the all-time high? It was on Monday, September 8th, the start of all last week, okay? Can we identify, can we cut it in half? Can we look at, that's me just guessing, that's the halfway point right there. But again, I don't need to guess. If we're doing a top-down analysis, it's time to be thorough, right? We don't need to guess. There's the opening balance, the opening day's price. There's the closing balance, closing price. Right there, you see, Ron is pretty good. You know, he got some sleep last night. See how he put the yellow line, cutting it in half, and it is exactly at 0.5 of the volume of that big base candle. Now I got my 618 and 382. I can figure out my bullish point of control of that candle that was printed on Monday, September 8th. So you see now how I figure the bullish point of control and I stretch it into the future. Then I can see exactly Thursday, September 11th. Look at the retracement. Came right exactly at 50% and it hit all of those pending buyers, and look at the results. They went right back up and the next day opened bullish and continued to move back up, okay? So stretch this into the future. We may revisit this location maybe this week, maybe next week at some point, okay? You could also place an alert in there, right? An alert is not just to blindly buy or sell, it's to get alerted that the volume has returned back into this point of control. So it's our job to maybe watch and see, maybe it comes a little deeper, creates a lower low, comes to the bottom. Maybe it kind of initially breaks it right there to that wick, and maybe the buyers bring it right back up, and then that day closes back above there. Then I know that they broke that block, but it came back with a higher low and closed above. So then I look for the zone to continue to be green, and maybe now a retest, and then it could be continuing to go back up. And it still holds as a supporting block. There was an initial break, but maybe it got a wick on that day and closed above, and we're continuing to move back up. So it gives me an alert to watch that zone when it comes down there, right? Okay, so, you know, like what I was just talking about, if it breaks there, I'm looking at that wick. That was resistance, could be support right there. And look at the price tag, 3,600, guys. I'm not making these numbers up. You can see, and you can see, guys, you know, some traders will just move the line to a psychological number and just say that. I don't do that. I don't look at the numbers first. I look at the points of interest. You see how I placed it at that wick of that candle right there, the highest point of that candle, and it just so happens to be 3,600. So that gives me now more and more context to that location right there. So if they do break that, there could be a lot of pending buyers waiting at psychological 3,600 to get filled, right? So that's just by looking at the bodies and wicks of candles, okay? Now, let's kind of look after last week how gold was moving. So you see, we kind of came in there, went back up, we came in, we made some highs, but they're all kind of wicks going up. We still haven't, you know, came and closed above here with some bullish volume. So at that all-time high, like right up here, the orange line, I could bring a red zone all the way down to like these bodies, like right in here. So if I do that, okay, so you see what I'm doing, the all-time high, 3,675, and I'm bringing it down to that body, got a little bit of that body, and I can see right now trading today, we're trading right inside here, okay? So what I could do is I make this zone red to represent from the supply zone. I got a rejection, a rejection, a rejection, and we're trading in here today, and we just got rejected. So this is a red zone. You can clearly see trading in last week. Wednesday, we came in here, back down. Thursday, came in here, back down, closed below there. Friday, it came in here again, and they pushed it back down and closed right there. Now I can see how today is trading. We're still in this red zone. You know, you can lower it if you want down to those wicks right there, if you want to do that, or you can keep it all the way up to the all-time high. This wick and this wick, you can place a yellow point of interest, like right there. Okay, and we'll see if gold can make it back up, fill these wicks, and get back up to that yellow line. And it just so happens, again, see the size of the zone, the red zone? I did not guess the size of the zone, right? I just went up to the all-time high, orange line, and I just brought it down to that body and that body, right? So now, see how I placed that yellow line at that wick and that wick? Okay, if I didn't, you know, just look at the wicks and the bodies of the candles, you could have done this just by grabbing your Fibonacci tool. Once you identify the size of that red zone, go from the top to the bottom and place your Fib tool. And you see right there, there is the yellow line. It's located at exactly 50% of this entire red zone, which is 3,657. And it so happens to be at the high of that wick and the high of that wick, right? I could even find the point of control of this supply zone right there. Like you guys might call me crazy because I have now two red zones. I have a red zone within a red zone. But you see right there, that's the real point of control of this entire red zone is right there. Okay, I know it's maybe confusing you, but for those of you that know what I'm doing, you guys understand what I'm doing there. Okay, so I can see it came in there. From the high, all-time high, lower high. Came in again, lower high. They pushed it again up there. It kind of looks to me like equal highs. It is a tad lower, but it looks equal still. And they pushed it back down. Now, how did the volume close on Friday? We closed with a little bit of bullish volume. You can see we closed right here. This is our opening price today, okay? So was there any gap up or gap downs? No. You can see we just closed. We opened right there. 3,642. It was initially bullish today where the daily candle opened and you can see it was blue, 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 and it made the high of the day so far. So that's my purple high of the day. and it got rejected at 3,646.47. It is lower than Friday. It's lower than the all-time high. So there is lower highs in the market. I can see that the sellers are offering lower and lower. That's what's creating those lower highs. And it got rejected at the highest point of the day. It came back to the opening balance right there, and the sellers were in full control earlier today, where this candle was bearish, bearish, bearish. It was a black candle coming all the way down. You can see it engulfed Friday's volume. It even took out Friday's low, and it came all the way down here, and it stopped at 3,626, around 3,625. And that created our lowest point of the day so far. And what were the results? Buyers stepped in and started rejecting the move and pushing it back up, pushing it back up, pushing it back up. And this is where the volume is right now. We have this bearish pin bar candle that we're not too far away from, again, the opening price. We're only about 20, 25 pips away from the opening balance. Maybe it could flip blue and come back to the highest point of the day, turn into a bullish pin bar, and we might be breaking out of the highest point of the day to continue to fill back up to this red zone and test this yellow line up here. However, the sellers could just stay here by the opening balance and continue offering and push this back down. So if we come back down and sellers continue push it back down, it's a black candle coming down, down, down. Right there, I've got a body close and a body open. That's a point of interest. So let's put a yellow line to let us know if we're coming back down to 3,633, that it might come back down, and then buyers are there holding it up as support and bringing it back up. However, if the sellers can continue to move it below that yellow line, they could continue to target the lowest point of the day and continue to push it back down into this green zone, okay? So right now, we do have some consolidation. It is bullish, bearish, bullish, bearish, bullish, bearish, coming back up. So it is trading sideways, but let's see how it's going to react in this all-time high supply zone. So this is what we got for gold right now on the daily. Okay, I know it was a pretty lengthy explanation on daily. I want to ask you guys, that you guys did your weekend work and points of, do you guys have similar zones, points of interest, points of control on your charts how I do, or are we completely off? Good morning, guys. It's 400 viewers, guys. If you guys can hit the like button on YouTube, we do appreciate it. Subscribe to the channel. Let's see if we can get this up to 85,400. Another 150 subs would be great. It's kind of like hitting a daily goal. 150 subs is like 150 pips. Very close. Good, Justin. Okay, so now what I'm going to do is I'm going to start to dissect the daily candle. And I'm like a surgeon. I'm going to start cutting it in pieces, but we're going to cut it now in 4-hour pieces. So now each candle that you see is 4 hours of trading. So we're cutting the daily candle and we're breaking it apart in pieces. Okay, so we're going to start to dissect. So now I can see how the 4-hour candles came in. I can see now what time it was, what 4-hour candle hit the highest all-time high. It was Tuesday, September 9 at 10 a.m. So then I can see the results off of it. I know that there was news on Tuesday. There was PPI data. I can see it come back up. When it came back up, it's a lower high. They pushed it back down. You see it took out that low, came into our demand zone right in there, right exactly at 50%. And the buyers were there. They got hit. And look at the results right after that. It started the next leg coming right back up into that red that point of control in the all-time high supply. You see rejection, started the barcode, and we pushed back down on Friday, okay? We can see now, right over here, this is kind of like how we opened up last night and where we're trading. So I can see the big bullish volume was 10 p.m. last night going into 2 a.m. That's what hit the highest point of the day. And then this candle right here represents Europe, the 2 to 6 a.m. candle. So this represents pre-London market open going into 6 a.m. So I can see it opened. It was initially bullish where it came up and almost hit the purple high of the day. It got rejected. It came all the way down. This was a big bearish engulfing candle coming all the way down. And then, remember, it's a 4-hour candle. And then the Europe flipped it back up, coming back up, and we closed right there. Now we have our new 4-hour candle, which is going to close in less than 3 hours. So this is our 6 a.m. to 10 a.m. candle. It's basically our entire live session. We're scheduled from 6 a.m. to 10 a.m. So we're like a 4-hour candle, guys. Okay, you can look at it like that. We when we come on this live session, we're basically covering 6 a.m. block to 10 a.m. Okay, so you can look at it right here. So we opened. While I was going over all the news, gold came up. It tried again at the daily high and got rejected, and now it's pushing back down. Okay, so will this in the next 3 hours? Are the sellers going to continue to bid down in here and push this bearish candle coming all the way down, filling that prior London's wick, and continue to come down to this daily point of interest and break it to the lowest point of day? Or is it creating a higher low and then it's going to come back up and we're just kind of barcoding? If you want to kind of consolidate the 4-hour volume, right in here, you can see where we are consolidating. Right in here, you can make it like a neutral zone. You can see we're trading in this lower half of this red box, and most of the volume is concentrated. Came down, closed, came back, closed in here. I can see it came up and down. The volume is still inside here. We just came up and it's still inside here. So the volume can continue to stay in this neutral area, or are the sellers going to continue to push it down in here? Like, this is where you can continue to dissect, which we will be doing. So we'll be going from the 4-hour to the 1-hour. Will we see an hourly candle maybe push and close below this red zone, maybe come back up to retest it? Then the next couple hourly candles are going to continue to push down and get down in here. Or are these hourly candles going to continue to come back up, turn up blue in this, and maybe close above here? I don't see one hourly candle in the last 4 hours. There's 1 hour, 2 hour, 3 hour, 4. Like, I haven't seen anything close above here. These are a lot of time, all the way from last Sunday, okay? Or sorry, from Sunday night, okay? I don't see any bullish volume closing above there on an hourly. Maybe we might see something today. If it closes above there on the hourly, maybe we come back, we retest this, and we could be flying back up to here, okay? But right now, the volume is kind of concentrated in here. Do we have any patterns that we can see? Any pattern recognition? What I kind of look at is I kind of clump together everything. So I look at that as one whole big run up, a top. You know, I can see where it came down right there, made a little bit of support, found the structure, came back up. There's like a lower high. So that was developing like an M pattern right there that did break down. You see, but that green box held it all up. Then it came back up. You know, it didn't come all the way to that all-time high, again, right in here. So you can see it's kind of like a double top within right here, same top right in there, getting rejected. And now it's trying to break this yellow line, which it's not allowing it to break right now. So we're consolidating here. We could easily get bullish volume or buyers asking trade up here, and then we're driving right back, trying again to attempt to break this red zone out, or the sellers will take charge and start to bring it back down into here. So this is going to be a big block this week. We may be revisiting this. We'll see how gold reacts to this green zone down in here. Will it break? Will it hold? Are we going to continue maybe all-time highs? See, right now the market is kind of just trading sideways right now. So what we can do is now dissect 4-hour, go into the hourly. Now you can start to see the hourly candles. I can see exactly now the hour which hit the all-time high. Now, more specifically, it was Tuesday exactly at 10 a.m. So we came in Tuesday, hit the all-time high, then that candle closed, very bearish engulfed down in there, and it continued to push down, made a double bottom down in here at 36.25, and we continued to come back up, lower high, pushed all the way back down. They broke that low, but right there in that bigger green daily demand zone, came back up where we came strong. But you see, we can't break through that point of control in that all-time high supply zone, and it came back down. Now I can see when we hit the lowest point of the day, it was 2100. That's 9 p.m. last night, and I can see now what's happened. I can see 10, 11, there's midnight. And here's 1 a.m. This bearish candle coming down was pre-London, 2 a.m. Here's London, came down, higher low, came back to the opening price. It engulfed that bearish candle. London was very strong for gold. And then I can see how it pulled back at 4 a.m. But you see it's not breaking out and no hourly closing volume above this 4-hour box. And then it came down 5 a.m. back down bearish, higher low, closed in there. 6 a.m. This is representing now pre-New York session. This is when we started our session. Gold was coming up, coming up, coming up, right at that highest point of the day, the purple line, and they rejected it back down as a bear shooting star. So now we opened up this candle, 7 a.m. First 15 minutes now, it's still got 46 more minutes to go, and it's showing a bullish body right now. It opened, it was initially bearish, but coming straight in here. So let's see if we can see an hourly candle close bearish below here to continue to push down, or is this hourly bullish volume going to continue to come back up? And again, we're kind of barcoding. If we look at patterns now on the hourly, you can see it came up top. There's our neckline right there, the bodies. It came back up. There's the second top and the rejection. So now it's just a little bit of buying volume. Let's see if they reject it with a lower high. And then you can see it's a natural like M pattern. It came up, back down. There's the support right there. I can draw an hourly white line for support right here since I'm on the hourly. Anything I do on the 4H or 1H is hourly. I use now a white line. Okay, so on the way how I color code my charts, anytime I see a purple high, I know it's the daily high. Anytime I see a purple low, I know it's the low of the day. When I see a yellow line or a yellow line, I know it's a daily point of interest. When I see now a white line, I'm basing this off of the hourly structure. So I can see it came down bearish right there, pre-London. London opened up, bullish, came back up. So you see how it kind of pivoted right there. And then I can see right here at 5 a.m. when it came down, look at what it came. This was a big bearish candle right down to that hourly support, and the buyers were there. They pushed it right back up. So now we're continuing to move bullish up here. So if we break below 3636, 3636 today, that could signal the bearish momentum to continue maybe pushing down to the low of the day and maybe breaking. But right now it's holding up. You can see it wicked off of there. It came back up. We hit the highest point of the day, came back down. And look at now how bullish it's coming right back up. So what we can do is now we can go to, again, lower time frames. We can bring it down to 5 minutes or 15 minutes. If I look at the trend so far that's pushing down, there is a bearish trend coming down. So, you know, in order to be bullish, I got to see it kind of break the trend line. So from here coming down, you know, I can try and connect it now. Maybe I can connect it at the wicks. Okay, so I can see that wick. I can see that wick still trending down. That's the hourly trend right now from the top. So I could go again, white line, and then I know that that's my hourly trend line, and I can see it's descending. But you see where it is? It's located, like the trend line is basically at the highest point of the day where it's trying to come back up. So right here, that bullish candle that's building, if it can break that trend line, that hourly trend, and I can still see its daily resistance there, maybe we break above here, even if it's an impulse break, let's say to 3650, right up there, psychological number. If it does close above there, then it could come back down to a retest right here, 3647, the purple line, or it could come deeper in here, but maybe respect the trend line for support and then do something like this and start to break back up, okay? So we still have to acknowledge that this is a descending slope coming down. We can also draw a trend line coming up from over here. So it's a symmetrical triangle. And a symmetrical triangle can break out towards the upside, or it can come back down to the downside. Okay, that's what's making it symmetrical. It's descending from the top while it's ascending from the bottom. But we do have a flat top right up here, okay? So it is a flat top up here, so it could continue to try and break out of here. That's what we got to watch for. So on the hourly, what I do is I break it down and we watch the 5 minutes. So this is how it looks on the 5 minutes. Now more specifically, I can see what time it was when we hit the lowest point of the day. I can see when we hit the highest point of the day. Start to see more structure on the 5 minutes. I can see when we pulled back right over here, kind of broke that hourly, but held up here at the daily point of interest, came back up. We pushed back down. See those 5 minute candles right there, 535, 540, 545, held up at that hourly support. So I can see that they're from the lowest point of the day, it's got a higher low, it's got a higher low, and a higher low. So can I do kind of like a shorter time frame trend line from the 5 minutes? I can kind of connect it right there, connect it right there, kind of maybe come a little higher, you know, start to get connections. Like right there, I got all 3 wicks right there. I got that body right in there. I got the body, body, body. I see those wicks broke through, but they were all impulse. See how I have this trend line still respecting the volume, and it still hit that wick right there. So this trend line came from 5 minutes. So anything I do on the 5 minutes is with like this red line, also my cut line, all of that. So I can see that that's a 5 minute trend coming right back up. It's still holding. So this is where, you know, we've got to see if there's going to be a big breakout. Look at the 5 minute double bottom. It came down. There's the bottom. There's the neckline up there, the hourly trend line, the daily resistance, the purple line, and then it came right back down, and it didn't break down there. See how it's respecting the trend, making a higher low, and we got 3 big 5 minute bullish candles trying again to maybe possibly break the trend, break today's high. Might be an impulse, it might get rejected back down, and then the market dumps, or it could just, you know, break out, close above. We'll see, maybe we'll hold as support, and we can drive up to right here. We'll measure up to the bottom of the red zone. That would be 3653. There's that 50% of there, and maybe the top part, okay? So you see how it's coming up real nice, coming right back up. There's a nice visual double bottom and a W. So this is what we got to watch for. Maybe what I'll do is I'll take the all-time high red box off here. We'll keep this red one. Just so you can visually see a little bit better here. Okay, so what I'm going to watch for on the 5 minutes is the type of reaction. See the highest point of the day, the purple line? So I can start to draw like a little bit of a zone right to the kind of those bodies and those wicks, just to let us know that there's like 5 minute resistance here. Okay, so you see what I did there? I went to the highest point of the day. I got those 2 bodies, got that wick, came in, I got that wick, I got a wick, 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 wick. So, you know, we can see these bullish candles are driving right at the highest point of the day, that purple line, and we'll see if they break out of here or get rejected down. Okay, it's 7:20. We have 1 more hour to go until we get to COMEX, so lots of time. Let's add our daily SST daily bar indicator so we can see our opening price. It was very bearish where we came down to the lowest point of the day right there, and that was at 9:30 p.m. last night, and you can see that the return is coming all the way back up with a higher low, higher low, higher low. The candle came back right there to the opening price. We have this bullish momentum that's right there near the highest point of the day. So now we've flipped the bearish candle into a bullish pin bar on the daily, and it could continue to turn into a hammer and break out of here. If I'm just looking for some imbalance fills, so from this purple line to the bottom of that red box, I measure the zone just like a carpenter measures his work. I measure my work as well. I'm a tradesman just like a carpenter. So you can see from the purple line to the bottom of that red zone, it's approximately 6.18. Nice number, right? Some of you guys trade the 61.8 on the Fibonacci. See how those numbers revisit us? That is the exact zone calculated up there. So it's about 62 pips, 61.8 to be exact. Now, that's the full, complete, you know, fill. But there's also, if I look at the 5 minutes, when it broke out with a double bottom right there, it broke out, but it didn't fill all the way to that red line. So you see where they kind of pushed it down right there. So for some scalpers, maybe we fill right up to there. You see, there was a pivot. It came up, the bodies stopped right there and pushed back down. They came to retest, red line, push back down. Retested the red line, they pushed back down. They came up again, lower high, and that started that move coming all the way down. So yes, that's the total to come all the way up to there, but what happens if it just kind of comes, revisits back to this previous resistance? Then you can see it's about 30 to 35, 33 pips right up to there, okay? So that could be like a TP1. That's if you're in a scalp. Maybe you take your stop loss. You can go to break even while you're up 30 pips. Maybe you could take some partials out because it could literally just come right up to that red line, get rejected, and come right back down, okay? So if we're watching it, maybe we'll break out of there, close above. Maybe we'll make that red line support to take us to the full 60 pips up there, right? And then will it go to the next yellow daily line? I don't know. We got to take it from, first we got to break out from here, see what reaction we get here, because this is resistance. Well, if we get up there, we'll see what type of reaction we get up there. And then that's a daily point of interest. That's a yellow line. That one holds the most weight, right? So if it comes, you know, for example, if you're in a buy and it comes all the way up there and you're up 100 pips at that yellow line and you basically don't do anything, you don't take your stop loss to break even or take partials, it could come all the way to that, you know, daily zone, 50% of that supply block, and big sellers drop you right back down. So you got to really understand where it could possibly go, okay? Guys, okay, so now with that top-down analysis, these yellow lines, do they match similar to where maybe your yellow lines are? Do you guys have a red zone in similar area like me? Or are we completely off? Similar? Nice. Okay, good, Johnny. What do you guys think? Do you guys think gold is going to break out of here? Option 1 is bullish breakout, or you think they're going to get rejected and come back down? So you think maybe it will come in here, get rejected back down, or you guys think maybe we'll break out of here, maybe retest this, we make it, and then we're coming up to that red line. Do you guys think option 1 is bullish or option 2 bearish? What are you guys thinking? I see a nice double bottom building nicely. This is nice clean volume. You see a nice bearish leg. You could have sold that leg. Here's a buying leg coming right back up. Here's a selling leg coming right back down. Here's another buying leg coming right back up. Beautiful. This is nice price action. It's not choppy. It's very clean. It's got a distinct path. Bearish, bullish, bearish, bullish. Clean volume. I hope it continues to stay clean like this, because then we can visually see what it's doing. Okay, I'll remove these arrows so we can watch. A lot of you guys are bearish. You guys think number 2 bearish. Also fake outs. Don't forget there could be a fake out. Okay, so if you're taking an impulse trade, right? There's a lot of traders that love trading on impulse. Okay, you got to know what could happen. If it impulsively breaks out of here prior to the candle closing, it could get rejected and come back inside here. Okay, so that's what you got to watch for when you're trading on impulse. Okay, so this 5-minute candle, look, it's approaching. Okay, those wicks are right there, right at 50% of that red box right there. Exactly where my dotted line is. You can see I'm right at that top wick, showing you like the resistance is right there, right? And you can see it's literally 50% of that red zone. And this is on the 5 minutes. So you notice how the patterns are they're pretty much the same. I did it on the daily. This big red zone up there, there's 50%. See this red zone? It was coming from the 5 minutes, from the highest point of the day. It came down to the bodies, and you can see it's literally those previous highs are 50% of that 5-minute block right above me. Okay, so it came in there again, got rejected. That's that hourly trend line. They rejected it. Let's see if this candle bar retains its bullish volume or will it turn bearish. And reminder, we're going into a new 30-minute candle in the next 3 minutes. Okay, it's going to be 7:30. So if you want to take a peek at your 30-minute candles, you can see that they're literally barcoding. That's why it looks like that on the 5 minutes, where we got that nice bullish leg, bearish leg, bullish leg, bearish leg. It's, look at how we're trading on 30 minutes. 6 a.m. was bullish, 7 a.m. or sorry, 6 a.m. was bullish, 6:30 bearish engulfing. That's what caused that bearish leg. Now we're coming up 7 a.m. back up bullish. So you can see that the 30-minute candles are literally consolidating, ready to get redistributed. So you got a bullish candle, bearish, bullish, bearish, bullish, bearish, bullish. It's all inside right in here. So will they break it out bullish, or is it going to continue to come back down? I like watching on the 5 minutes. So you see it came right back in there again, and now it's pushing down with a bearish candle. So will this momentum go into the next 30-minute candle and maybe continue with the next bearish leg down, or will it kind of reverse back up and try and break out of here? So I'm not in a trade right now. I'm just continuing to wait till 7:30, see how things move. I can add EMA. EMA 9 is right there, this green line. Some of you guys use this. Our EMA 200 is exactly right at our daily point of interest and the opening price of gold today at 3642. So we got our 200 and 9 EMA. Those are suggesting the price is still bullish. Volume is above those indicators, but we are at this big resistance, like a big wall above us that we cannot break yet. We also have a buy signal, buy setup looking. If we come over here, guys, on gold. Okay, so let's just take a look. So we're looking for above the 36.47. Okay, just rounding it up, 36.47. Looking for maybe a possible buy. So when I look at it on the charts, 36.47 is kind of right above today's daily high, right above the red zone. Okay, so no volume has closed above 36.47 yet. So I can continue to wait it out. I could buy maybe a deeper discounted pullback, maybe down at 36.42 if it comes down in here and then curls back up. Or I can just physically wait to see what happens up here, okay? Carla, your numbers match mine. Excellent. Good job. Okay, so what you could do now is leave these lines for all of today and just trade off of these. You know, you got your support levels. Obviously, the yellow holds more weight than a white line because I know white is hourly, right? And then, so you can basically trade off of those, you know. If you do a bigger top down, like I didn't go too far down, I didn't go too far up, but that's how you can trade the entire week. You could leave all of these lines on your charts throughout the entire week and just trade off of them, right? I delete these and start a new one for you guys every single day. But if I was trading without you guys, I do my work on a Sunday. I leave these for the entire week. And then at the end of the week, then I review and then I set up for the next week, right? Okay, so we're at the start of now, the new 30-minute candle. We didn't get the volume above the 36.47 area up there. So it got rejected at that hourly trend line and now pushing back down. So let's see how far down will it come down to. Will it come all the way down to this yellow daily line, or trading into about 50% of that bullish candle? Will it get a wick, maybe curl back up and make a higher low? Is anyone in a buy, anyone in a sell right now, or anyone in a feeler trade, anyone sidelines? What's your thoughts so far on gold? Are you guys in a trade? I'm not. I'm waiting to see how it develops here. Christoph, small buy. Yep. it could definitely continue breakout. It's got nice higher low, higher low, higher low. It's a beautiful double bottom, but just struggling here at this resistance point, at this hourly trend line. Okay, it could definitely break out of here. But again, let's just see. You know, I'd like to see maybe if it will come back down, maybe right here to the opening balance and respect this area and come back up with more volume. However, it might not even come down here. It's building right here, bullish, bearish, bullish. Maybe flag, consolidated flag here to continue to break out. Some of you guys are already in buys from 36.39, 36.40. Okay, yeah, you guys got good little cushion. And just a reminder, if you go into a buy, like right now, if you're to buy, you know, you can buy this bullish flag, but, you know, we don't know what reaction it will get up here. So, but if you want to go in, you know, like then it could be an impulse break, but it could also get rejected again and go back down. So we're either waiting for volume to confirm a close above here. The reason being is because if I get blue volume confirmed above here, I'm going to flip this entire red zone green. We haven't done that at all today, right? It's been resistance, been red this entire time. So we do not have a bullish candle physically closing above here as of yet. Will this be the first one? Will the next one be the one? But in order to get that confirmation, got to see a blue candle close above there. So you see we're respecting 50% of this bullish candle right here. I can tell by the wick and the wick right at 50%, still holding. We got a good volume, came right back up there. Again, they rejected it back down. So that's where I have that flag. That's where the volume is kind of concentrated. It's going bullish, bearish, bullish. Will it continue to flag in here and continue to close strong? Here's the close in 5 seconds here. Okay, so it closed strong above this flag. Can it continue to build and try again? This red zone, now it's coming back down, bearish, okay? So, but when it comes down bearish, I look for a higher low. I look for a higher low. I look for it to build off the bottom. I look for it to build off of 50% of that previous candle. Will it get its wick? Will it continue to turn up? Maybe this one could be the one that impulsively breaks out of here. Again, if you're waiting and you don't want to trade on impulse, then we got to continue to be patient and watch for volume closing above here. Crown, it's moving clean up and down for scalps. Yeah, I agree with you. This is nice scalping intraday volume. It's not too choppy. It's got clear path coming down. It's got a clear path going back up, clear path going down, clear going back up. Those are those 30-minute candles that we just looked at that were bullish, bearish, bullish, bearish, the barcoding 30-minute candles. Because a 30-minute candle consists of 6 by 5 minute candles. So if you look on this downtrend, 1, 2, 3, 4, 5, 6, 6 candles coming down, 1, 2, 3, 4, 5, 6 going up, 1, 2, 3, 4, 5, 6 going down, again coming back up. You got 1, 2, 3, 4, 5, 6 going back up. So you can see kind of how the 30-minute candles are trading by looking at these 5-minute bars. How was everyone's weekend? Did everyone have a good weekend? Anyone going to be in Chicago next weekend? Chicago, Illinois? I'll be down there for the Bears-Dallas Cowboys game. Love to have some Giordano's deep dish pizza. Anyone know any good deep dish pizza joints in Chicago other than Giordano's? I heard Pizzeria Uno is really good. Michael, you've already made 2% today. Amazing. Good job. Michael, you know, you could call it a day. It could be, that's it. But if the volume is trading really nice like this, sometimes, you know, like if you got a good head start, what I would do is if you locked in 2%, I would lock in 1.5 and just trade the rest of the day with 0.5%. If you lose that 0.5, then be done trading for the day and walk away with 1.5% in your pocket. But maybe with that 0.5, if the volume continues to trade this clean, you can maybe bump up that to 2.5, maybe 3% for the day and get you well on your way for your weekly goal. So sometimes when volume trades clean like that, you can definitely do that. Continue trading, but while risking your appropriate risk. And if you do get stopped out, then that's it. 1.5, you're still your good day. Good day. Don't take anything negative from that. But don't go what most traders do, is risking your entire 2% you've made, and then you risk it all and you lose it back, you give it back. I guarantee you when you go to break even, you're not going to stop trading, because then the psychology takes over where you know that you were up 2%, now you lost it and you gave it back, you're at 0%, you won't walk away. No one will. No one will walk away, because our mind will keep telling us we got to go back in, we were just up 2%, we got to make it back. And then we start rushing trades. Then the volume switches from nice trading volume to indecision and impulse and fake outs, and we get choppy volume. And then we start going in drawdown now. Now we're down negative 0.5, negative 1%. Then the emotions take over. We get pissed off that how do we blow 2%? Now we're down negative 1. You're not going to walk away right there. You're not going to stop. You never stopped while you were ahead. You didn't stop at break even. Now you're not going to stop at drawdown. And then you're going to go through what retail traders go through. I went through all of this myself, guys. I know how it is. That's why I can speak about this, because then I would turn a 2% day and I'm now down 3%. And then I got to take that negativity into the next day trading, where you got to think about that. So that's why, guys, psychology is the hardest thing about trading. These candlesticks are the easiest part. It's right there where you're up 2% and you don't walk away and you go through that cycle. That's the cycle of trading. Every retail trader goes through that. Your mind keeps telling you. So if you can be disciplined, you can really learn how to do good in trading. It took me, I can't even tell you how many years it took me to learn that, okay? I learned from all my mistakes. It's very important, guys, believe me. Have like a trailing stop loss. If you're at 2% positive for the day and it's good trading volume, I'm not saying that you have to completely stop trading for the day. That's ideally what you want to do, but if you can't, and the volume is trading, you know, like when you got that rhythm, it's just like in sports, when Michael Jordan is shooting and he's on the rhythm, his team is feeding him the ball so he can keep shooting. So I'm saying the same thing here too. If you're having a fantastic day and you're reading the patterns correctly, volume is cooperating and you're at 2%, I'm not saying just stop trading for the day. I'm saying lock in 1.5% and just trade with the 0.5. If you give the 0.5 back, then you walk away. 1.5. The market's telling you walk away ahead, and come back next day on a positive. Don't go through that emotional roller coaster. But if you can take that 0.5, maybe you get up to 1%. Now you're up 3% for the day. Again, same thing. Trailing stop loss. Lock in 2.5 and just continue trading with that 0.5%. Once you lose that 0.5% and you're stopped out, you're done trading for the day. That's it. That's the proper way of doing it, guys. Just like when you're in a trade, just like when you're in a trailing stop loss, you take your stop loss break even, you're trailing your win behind, you can do the same with your daily goal as well, okay? Because some days, once out a week, you might have that fantastic day that really gives you that nice big push to help you for your week, maybe your month, and keep compounding that. But don't give it back. Don't give it back. Don't be silly, guys. Okay, we got a nice big bullish candle. It opened bearish, dropped, higher low, coming right back up. So let's see. We're going to get maybe either an impulse break. We might get a bullish candle closing above here, or we're going to get another rejection. So here's a nice, solid, big bullish candle. coming right back into that previous high. We're in that red zone. So red illustrates sellers, red illustrates offers, red illustrates resistance. Okay, so it came in there very nice, strong, and bullish and got rejected again at that point. Why? Because there's sellers still there. Okay, so now we got to see how and where the candle body will close. Will it close bullish back in there, or will it close back bearish below here? What will be the results? That's why sometimes it's okay to wait for candles to develop. It's okay to wait for candles to close. You don't always have to trade every single candle on an impulse and just hope and pray for the best. We can literally sit and wait. Yeah, a lot of traders do that, John. When you're up like that, you switch to a smaller cash account. And yeah, a lot of traders do that as well. They have multiple trading accounts set up. So when one hits a daily goal, maybe then they'll use the other one. That's a good strategy to have as well. A lot of traders in our group, they have their main account. Once they hit daily goals on that, they go to their smaller account for learning purposes, testing out strategies. If they do get stopped out, they're not losing from their main account. They're just going back to education. So that's also a lot of our snipers in our group do that. So that's amazing that they do that. That's great discipline. You hit your main goal with your main account, whether it's your own money or it's a prop firm, whatever it is. You did what you had to do. You know, when you go to work, you clock in and you clock out. You did your job. That's perfect. But if you want to continue trading for learning purposes, then you have another separate account. You can go smallest sizing possible. You're not necessarily trying to make money with the account or lose money. You just maybe want to go back and learn, test out some strategies, see if everything continues to uphold to your analysis, and continue learning. Okay. This candle now is going to close in 30 seconds. Very bullish, coming right back up, right in that red zone. And now we're going to get a new 15-minute candle opening at 7:45. So look at even your 15-minute candles. Like they're building, but here's that big red block right above us. We are ascending from the bottom, so it's a beautiful, we might have a continuation bullish breakout. Let's watch the close of that 5-minute candle. Where it closes, watch. This could be an impulse breakout now, okay? So where will it close? Right there, it closed right at our red line, those previous wicks. So it opened bearish. You can see the black candle there. Will it come back down? Okay, to retest. Notice how I haven't changed the red to green zone yet because I do not have a bullish candle closing above here. So we're still trading in this red zone. There's where it came down black, came all the way down, got a wick, turned right back up. And see the indecision now, okay? So this is where it was bearish, bullish, bearish. This is now volatility right exactly at 50% right here. So can the buyers continue? And we're right at the highest point of the day, the purple line. So can we have an impulse breakout above here? Or are we going to get rejected and come back down to retest the trend line? See, now we have our first candle. The blue candle did close above this hourly trend line, okay? So remember what I said, the trend was resistance right here. With volume closing above, the trend line now could turn into a support level. Okay, so there's the bearish candle coming back down. Is it testing 50% of that bullish candle? It was, but then they pushed it back down. So let's see, will it come all the way down? Will this be a bearish engulfing candle, or will it catch a higher low wick and trade back up to the opening price? Right now it's still bearish, okay? So you see, guys, they're really holding it down still in this red zone. That was a strong move coming up there. But the preceding candle, and it's your 7:45 candle, it's your new 15-minute candle. That's why it's a higher time frame. And look at how they rejected it, the 15-minute bar coming down now, okay? So again, we got to go through the motions. Will it pick up higher low support, come back up, or will this be a bearish engulfing candle and start the next leg coming back down? And again, we're rejected at this red zone, okay? Guys, we have 530 viewers and we have 175 likes on YouTube. That probability is not really good. So if we can bump up the likes, guys, that would be much appreciated over here. And then we can get ready to analyze going into COMEX and then also do our NASDAQ and our US30 analysis as well, getting ready for Wall Street, okay? So if you guys can kindly leave us a like, we do appreciate it, guys. We want to be here on a daily basis with you guys, but we got to be motivated to be here, right? We get motivated by the likes, the subscribers, growing the growth of the channel, finding new traders around the world. You help with that, okay? So every time you hit the like button, YouTube will push us out further and further, get more reach around the world. Hopefully we can get to every single continent on the world and find as many traders that want to learn at no cost, okay? We learn and we earn together. Good return. Okay, so that was a big bearish candle coming all the way back down to that red line. That's 50% of that bullish candle, still holding good support. So now we have about 1 more minute and 15 seconds to go in this candle. Okay, so you see it came down bearish, but the buyers are there returning it back up. Okay, so now again, it's going to come down to where it closes. If it closes like right here, then it's a bearish engulfing candle. It could continue with momentum to the downside. However, if the candle turns bullish and comes back up, but notice the most important thing is we have not closed above this red zone or the highest point of the day. So this is still a red box. It's still holding resistance, okay? But it is holding still in here. So you could have a bigger consolidated zone if you kind of want to open it up from red line to red line. That's where we're flagging currently right now. Joanne, welcome from Holland. Thank you for joining. Okay, so the candle's closing now in 10 seconds. It looks like the sellers are continuing to bid near the low. Looks like a bearish engulfing candle. So if it closes near the low, the momentum could take us 1 more leg down to this yellow line. And that's more of a daily point of interest. Your 200 EMA is there. So, you know, like if you wanted, like if you were buying, looking to buy the highest point of the day, you could get a discounted buy down in here if it comes down here. Or we could just wait for it to, again, accumulate and maybe have its breakout, okay? So I'm not in a trade right now, okay? So I'm continuing to wait it out. Oh, Nick, you used to live there. Uno is definitely really good. Nice. Yeah. Good morning, all the Menta from Dubai. Welcome. Thank you for joining. Again, the markets will open up at 8 a.m., right? We can look at the hourly too. We can look at exactly how the hourly is. You know, we're in a range, okay? So guys, you know, don't like lose hope that, but let's just look at the hourly. It came back up. 3 hours it went up. 3 hours it came down. 2 hours it went back up. Could not break. 2 hours it was coming down. Now this hour we were coming right back up. It was a big, strong hourly candle ready to break out of there, but it got rejected. We saw it on that 7:45 15-minute candle coming in the market. So this hourly candle is going to close in 8 minutes. How much of this volume are we going to retain going into the close? Can we at least keep it above that yellow line? We kind of don't want to lose the yellow line, because if it closes below there, then that could become daily resistance and our hourly volume is closing below, and then it could start a leg coming back down, right? So we want to really focus on this yellow line. Right now it's coming down here. So can we continue to hold the yellow daily support right here at this daily point of interest for gold? Or are we going to lose this and then it could definitely continue come back down at 8 a.m., break our trend line that we've created here with these higher lows, and then come all the way back down, trade down to the white hourly support, 36.36, and then our next daily level is 36.33. Okay. Well, let's see. Maybe it will come down, get a wick, and close near the high, and then start that next leg coming back up for 8 a.m. Believe me, I want to get into a trade. I'm itching. You can see me itching my beard right now. I want to get into a trade. I'm literally itching to get into a trade, but it's still not presenting itself. It's just, you know, I see buyers are in the market and I see sellers are in the market. So to me, it's still, you know, in an accumulation phase. And did not even impulsively break above the daily high, and I don't see a body close above there. So I don't have any confirmations above this red zone yet. Now I got to see the bottom of the depth of market, how it builds. Is it building towards the upside, or now is the depth of market building coming down? And we've seen that this entire call. See that bearish leg, bullish leg, bearish leg, bullish leg. Okay, but now we have like a bearish leg, but is it going to come back up with that bullish leg? Notice the volume is now not trending as nicely as it was here. Now it's more of a consolidated. So both sides are accumulating for that next move. You can see buyers are trying because we're at the highest point of the day, right? And sellers are still there protecting that. But if it continues to build off the bottom, if we continue producing higher lows, it could continue to build and then naturally just break out of here. Kingsley, thank you for joining all the way from Nigeria. Thank you, bro. We appreciate you, man. Nigeria is big into trading. Respect to all the Nigerian traders. I've had a couple one-on-ones with some Nigerian traders, and they're unbelievable traders. The way they read price action is unbelievable. South Africa too, yes. South Africa too. Big Forex community down there. Okay, so we got, see that? That was a bearish candle, bearish. Buyers rejected it back up. It closed as a bullish pin bar. And now we're still back in here, you know, accumulating bullish momentum showing us. But this candle is going to close and we're going into 8 a.m. So we're going to have a new hourly candle in the next 5 minutes. Okay, so it's good to watch now where this hourly candle will close, how it will close going into the next hour. Okay, nothing has broke down yet. Okay, that was a big bearish candle. It did open next momentum of the next bearish candle, come down there, but got that wick, and the volume is still concentrated in this flag zone, so it could definitely continue to build and break out of here, but it could come up, lower high, and then we push back down. Unfortunately, if the sellers close it below here, then it could trigger that next leg coming back down. Okay, so this is for both of you guys, because I know some of you guys are buying, and I know some of you guys are selling at the moment. Okay, welcome to the world of markets. Sometimes I'm in a buy and you're in a sell. Sometimes I'm in a sell and you're in a buy. Right? That's how trading works. Okay. For every buyer, there's got to be a seller, and for every seller, there has to be a buyer. Hopefully, you're on the right end of the transactions more than not, with proper risk management. And any news we have over here on the left side of our chart is financial juice. Right now, ECB's Schnabel is talking about interest rates are in a good place. We had, what is here? Trump trade advisor Navarro says India is coming to the table for negotiations. You got Secretary of State Rubio, encouraged by Europe snapping back sanctions on Iran. U.S. is 100% supportive of snapback sanctions on Iran. What else is saying here? And guys, just keep an eye on anytime Trump speaks, because he can literally move the markets with any tweet he says, with anything regarding anything, basically. It does require a little bit of patience watching this stuff. I know it could be frustrating if you're in a buy, and it's also frustrating if you're in a sell right now. We had this last week in a couple of our trades where, you know, we had one bias, we stuck with it, we placed our stop loss below a critical level, and we allowed the trade to play out. And fortunately, it played out in our favor. So this is frustrating, I know, for both sides. I know if you're a buyer, it's not breaking out of this red zone. And if you're a seller, it's not really breaking down below here. Every time it comes down, it gets rejected back up. So it is frustrating for both sides. That's what consolidated volume is, you know. So that's why I choose not to trade in a consolidated environment as much as possible, because I don't want to get frustrated with this volume. I'd rather wait for some confirmations. Maybe are the sellers going to close it below here? Are the buyers going to close it above there? Was there any false breakouts? I don't see any false breakouts yet. Still respecting these levels. But now we got one more minute to go into the close. And then more importantly, we have a new hourly candle. So look at our 8 a.m., our 7 a.m. candle that's going to close. Remember, it was really bullish, bullish, bullish. It came right up there to the highest point. We saw it on the 5 minutes, and now it's getting rejected, coming back down. So that's what I was saying. I was more focused on where this volume will close. Will it close above or below that yellow line? The yellow line is the most important point of interest on this chart right now. That's our daily point of interest. So far now, sellers are pushing it down. If they close it below here, then they could attempt to break that daily position and push it down further. However, at 8 a.m., there could be some hourly buyers waiting to get filled down in here, and that's the opening balance of today's price, 36.42, could get filled now, and we could see the next leg coming back up at 8 a.m. Okay, so I'm going to wait for this full bar to close, 20 more seconds. And that's also your 200 EMA, guys. If you guys use that purple line, it's right there at that 200 EMA. We're at the exact opening balance of our daily candle, and we're at our daily yellow point of interest. Where will it close? Get ready. Where's 50% of this candle? We can cut it in half with this. Okay, so here's 8 a.m. open, bearish. Okay, came down, got a wick. If it turns back up bullish, there's approximately the 50%. I'm going to keep it right there where it was a wick, a wick, a wick. If it comes all the way back up to that red line, that could be resistance, right? So in order to continue to move to the upside, we've got to get our buyers to physically close it above there, retest this, and then maybe we can make it that next leg coming back up. So far, it is currently holding at this daily position. And on the 5 minutes, there's this little fair value gap right here. So notice how I did that. I located my yellow line. I look at that previous wick and that wick. And this is a bullish fair value zone that it's trading into right now. Okay. How did I look at that? How did I find that? See that wick right there and that wick right in there, that meat of that bullish candle now got transacted in there, and this one got transacted in there. Will we continue to hold this block and continue our next move up, or is it going to continue to come down? Okay, so, you know, we could wait for this body to close, or you could trade this body, whatever you like. This is representing the first hour, first 5 minutes of the first hour at 8 a.m. And right now it's still holding that daily yellow line so far. It came back up, they pushed it back down. It's refueling itself, continuing to fill. But the big point of interest will be right here, the red line and the 9 EMA. That red line was the previous wick. It was representing 50% of that bullish candle. Now they've kind of inverted that to resistance. So we can either wait for bullish volume to close above and then maybe continue to buy with this, because as it's coming up, they're rejecting it back down. So, you know, maybe let's let this 5 minute candle settle down. Maybe we found our consolidating area now here, testing this green zone and right below that candle. So maybe we got to allow it to build in here Maybe we'll see our next leg coming up. However, if we fail to hold this, then it could start to, you know, turn bearish, one more leg down and break this trend line and start to drop, okay? So let's see right here, guys, how it builds. And we're about 17, 18 minutes away from COMEX market open as well, okay? Half this candle is exhausted, 2.5 more minutes to go. So it was nice and bullish, blue, 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 got rejected, came back down to its opening price, still holding in here. I'm gonna wait for this bar to close. Now it's a bearish pin bar that could turn into a shooting star and look to attempt to continue to break through this green zone and activate some more orders, or possibly close below here. Then that zone would turn red, and then you can see the next leg continuing to push down, okay? So it is technically bearish now. This is the bearish leg. So it got rejected again right up there. So it's nice, beautiful double bottom moving up. There's the neckline, and 745, that 15-minute candle took us all the way back down into here. Hasn't broke down. Like, the trend has not broke down. It's still technically bullish. But let's see if it will build off of this, make a higher low in order to get back up to that highest point. 90 seconds to go. See what Trump said here? Companies and corporations should no longer be forced to report on a quarterly basis. So he wants to change that, the reporting schedule. Maybe he'd like them to report every 4 years. They don't report during his term. Okay, shot clock, 24 seconds. It's a bearish shooting star. So you see it initially opened bullish. Below there, lower high, pushing down. Where will it close? Let's see. 8 seconds to go. Coming back up, spin top, right back to its location where it started. Okay, so it could open bullish again and continue go up. If it does, it's still holding. I see the rejection from below. So I'm watching. I might entertain a buy if we can continue to hold this green zone and it builds a little bit. I see a black candle coming down. So I see the flip, blue. It's right there at the highest point there. So it kind of pushed, rejected, back down. If it fills one more time, I'm going to go in. Okay, down, down. Is it filling one more time? No, got rejected back down. Bearish pin bar. Will it turn into a shooting star or come back up green one more time with a higher low? So it's transacting in this green zone still. We're at that daily point of interest. We're at the 200 EMA. Can our buyers step in here? It's a shooting star candle. Maybe it wants to continue to push down. I am looking to entertain a buy here. It's at the opening balance. Would be a good discounted buy from the highest point of the day. I'm getting about a 40 pip discount to buy inside here, but it's still a shooting star candle. So it's still bearish. And that wick showed me a lower high, shooting star candle coming back down. Okay, sellers are still strong here, continuing to push this leg down. I kind of want to stay with the trend. The trend is bullish, so I kind of don't want to sell right now. I kind of want to buy. I'm looking for the body to flip back up and go back in, go into that buy. I was going to take that blue candle but when it came up, it went too fast. As it was coming down, I was looking for it to refuel, and then I was going to buy it. But I saw it coming down. It turned into that bearish pin bar, then a shooting star. So I'm still holding off of it. I got my trigger ready. S&P is approaching the all-time high now, Michael. Nice. Yep. We could see the markets continue moving to all-time highs prior to FOMC. And a lot of analysts are saying could be sell the news event. They announce the rate cut. They officially announce it, and then the markets sell off. Okay, so that's a big bearish candle, took out that low. How much further down can it go into? What's left of support down here? Like down in here where these four bodies are, right there. That would be a nice level to get a discounted buy down there, right? That's what started that big leg up, coming back down. Okay, good wick return. Again, let's see if the body will flip with 2 more minutes to go. Still transacting in that green zone. Okay, remember we had this last week where we broke that green zone with wicks, but came back in, held, and then went back up. But right now, if that bearish candle closes below that zone, unfortunately, I'm going to have to go green to red on this zone unless the buyers can continue to ask and trade near this yellow line, pull it back up. So for you guys that said the option 2, selling, you guys were correct. That brought in the selling leg. Like I said, there's going to be two sides of the story. You know, there's always going to be buyers looking to buy and sellers looking to sell. In this situation, sellers are winning out this leg. It's not over. Like, we still have an uptrend forming. Okay, you see this. This is a higher low. This is a higher low. Okay, so it still hasn't really broke down. Sellers, to get the control, would have to break it below here. They break that trend line, and then it could trickle down. And then sellers are in full control. And then that daily candle flips. Right now, you see it's below its opening price, and now it's coming down. Okay. And we're about 10 minutes away from COMEX too. Okay, so we're going to get a little bit of volatility coming up in the next 10 minutes. We don't have much news today. 8:30, just Empire State Manufacturing will be coming out. And then we'll stick with gold till about 8:45, and then I'm going to move over and we're going to do some NASDAQ analysis for this week and some Dow Jones. So that body did close below that green zone. So I'm just going to go through my motions, okay? The sellers did prove to me that they closed below. So I go red. It is an ignited bearish bar continuing to push down. So will it continue to test the trend line or this deeper pullback down in here? So it is still relatively pushing down. Okay, so came back up, bullish candle, again trading in there, but now it's a red zone. So how will it react in here? Will it come back in? They push it back down. So you can see there it came in, they pushed it right back down. Will we come through here and close back above bullish and then maybe gain that momentum going into COMEX, or are they going to continue selling this off prior to COMEX? So guys, things are going to get interesting. I might look to take a trade soon. So I'm looking right now. I'm going to my gold. I'm looking at my spreads. I got a 0.7 right now. And just putting the correct lot size. If I do take a trade here, I don't want to make any mental mistakes. So you guys too, if you're looking to take a trade soon, I would double check your spreads. If you're trading Forex, if you're trading futures, you don't have to worry about spreads. Just make sure you got proper sizing. If you're going to determine if you're going to go in either a buy or sell, visually, where would you be placing your stop loss? Maybe measure it so you can calculate how much risk you're willing to take in the trade. All of these things should be determined prior to taking the trade, right? That will help you understand how much to risk on the trade, what your bias is, maybe have a TP plan, things like that. So you're not guessing. We want to eliminate guessing from trading. And for you guys that use these EMAs, the 9 is coming towards the 200. This could signal a bearish crossover. If the 9 crosses below the 200, could continue to push down. Okay, so we got the big bearish bar coming down. We're going to have a new 15-minute candle coming up in the next 1 minute, a new 15-minute bar. So you can see the 15s, how they're trading as well. So they came up bullish, bearish, bullish, bearish, bullish, and they're coming back down bearish. So are we going to come back up maybe bullish again for going into COMEX, or are they going to break this and this bearish leg is going to continue to push down to that hourly support down there to the 36.36 level, or will it come all the way down to that daily of 36.33? So there's still buying opportunities, right? You can buy, it's still trending up currently, but now it's ultimately testing the trend line right now. So I like to watch it on these 5 minutes. Here's the close in the next 30 seconds. And heads up, guys, 5 more minutes will be COMEX market open. So that's where things can get a little bit more volatile. There could be sweeps of liquidity, right? There could be quick moves, or it could be a big bearish candle that opens, grabs, takes out some lows, grabs a wick, returns back up. You know, anything can happen. So just treat it with proper risk management going into COMEX, whether you're in a trade or not, or you're looking to take a trade, okay? Because now we're going to get the COMEX market open. It is a Monday, so remember, it's been closed all weekend, and now it's going to open up, okay? So it's still technically bearish, opened up bearish. Now we're right at the trend line. Will it take out this zone and drop a little further down? Where did we have the 5 bodies, the 5-minute bodies right there, kind of pull up the pivot point right there, it came down bearish, closed right there, came down to that hourly, closed, came back down one more time, got the volume above, and that's triggered that big, strong bullish leg coming up to the highest point of the day. We got rejected coming back down. This is what built the higher low green block right here, pushed us all the way back up, again, to that highest point of the day. Then they rejected it, and now the leg is, the sellers are pushing it right back down. So we're right back here again. This could be like a double bottom, you know, at this block right here, where it came down, one bottom, there's the big neckline, came back down right here. This is a second bottom. Will it continue to, you know, get strong and come back and break above there, or is it going to lose this and continue to push down a little further? Okay, so right now, still showing me selling pressure. That's a big black candle pushing down, took out the low, transacting in the screen zone. It might push a little further, but I'm looking at that red line right down there. You know, when I say a wick, a wick, a wick below bodies, right down in there, that could be the bigger hourly support. Okay, this is just more of a minor zone at these 5-minute candles, but more higher time frame is down here. Okay, will it continue come down? It's a big M pattern too now from the top. So not just double bottom, also look at it at this point of perspective, how it came up. There's the neckline right there, came back up, second top. So this is the second leg coming down. If they officially kind of close it below here, COMEX could open up bearish, take out that hourly, fill those wicks, and drop down to the daily. That's the best area to be buying in my opinion. If we can get a buy down there, at 3633, we're buying at a daily point of interest off of a significant pullback from the highest point of the day. But, you know, it could turn bearish and, you know, and just continue. Then gold turns bearish today. Okay, so we really have to watch this. It's going to be interesting what they do here at COMEX. So let's get ready. We're about 2.5 minutes away. My bias is like bullish, like it's always been bullish this entire time on this call. I just didn't want to buy the highest point of the day, so now it's just been coming down. I looked to maybe take a buy there. There was no opportunity. Continue push down. Look for maybe an opportunity here. It's a bearish candle. So, you know, I'm just looking for buy positions at a deeper discount. So how far is the market going to come down? I don't know. Where will it pivot? I'm trying to figure that out. Okay, so there was the break. We got a wick, volume back in that green box. Is this where it's gonna return back up? Here's the close in 1 minute 40, walking right into COMEX. Okay. Big push coming back up. So it shows me it broke. Didn't really break this area. That's technically a higher low. Good rejection on the buyers. Okay. How will the body close? Will it close back above that trend line? Will we start COMEX bullish? And if we do come back up bullish, remember, we do have our daily point of interest yellow line as resistance above us in that red zone. Okay. So even if it comes back up, you know, bullish, could come right in there and go back down. Okay. So, and if we're buying, we're also counter trading this overall leg that's coming down, but higher time frame is showing us bullish momentum. Okay. So we're buying, if we buy, we're buying with the higher time frame analysis. If we're, you know, but we're counter trading this leg that's coming down here. Okay. So 30 seconds going to close. We flipped the candle, turned into that bullish pin bar. Now it's the fight. Right at that current trend line. We're back above that green box, still holding. And get ready, guys. It could be just like a continuation play going into COMEX with some volatility. Let's see what happens here. And Trump is speaking right now, guys. So if you see it there on Financial Juice, Trump is in there speaking. Okay, here we go. COMEX market open. It closed bearish right in there. So open bearish coming back down. Will there be a quick wick and then a flip to come back up blue? We're still trading in that green box. So look for higher low wicks. Okay, it's coming down, coming down. Look for that higher low wick. Because if it takes out that low wick, it'll continue to come down to this red line. Okay, so it's testing that wick right there. Will it break it or will it be a higher low? Okay, so COMEX has opened and it's bearish, took out that low. Okay, so can it come all the way down into this red line or the hourly in there? That would be a good opportunity if it can come in there. Okay, so big bearish candle still coming down. I haven't changed the color of that zone because this body has not closed officially yet. Okay, now it tapped into the red line. The red line is that body and that body from 535, 540, 545. The hourly white line is right there. That's hourly, 36.36. So if that hourly white line can't hold, those wicks are at 36.35. Okay, so it's continuing to push down. Lots of time left on this candle. 3.5 minutes is a lot of time. So still open bearish. They're continuing to push this thing down. Now I like to see what type of reaction it gets at that white line. If it taps it and returns back up, then I know that it triggered like an hourly support area. Okay, so it's trading again right at this red line. Okay, good return coming back up. Good return coming back up. Let's follow this volume, coming right back into that zone, coming back down. Right in there. Could flip back up. Beautiful. Could flip back up bullish, grab liquidity during COMEX down in there. Okay, coming back down bearish. 2 more minutes to go. It's going to be interesting to see where this volume closes. Okay, so 1 more minute to go for the close. First 5 minutes of COMEX closes below that green zone. Unfortunately, we got to flip it red one more time. It looks like, you know, these are developing as sellers blocks. Unless we can close inside or above, it'll be green. Okay, we got a nice return bullish pin bar candle, maybe possibly turning into a hammer, coming back up. Maybe we'll come back down, retest this zone. Okay, so far it's still holding up. COMEX came all the way down, almost tapped into that hourly point of interest, coming right back up. Good return by the buyers, but we still have bearish body still on the candle. Where will it close now? Okay, here's the close in 15 seconds, guys. So it closed inside, okay? So look for that bullish ignited candle. Watch one more time, it refuels, okay? Back down, still holding that ignited open, still holding it. Okay, I'm going to go in a buy. It held it a couple times. I'm going to place my stop loss now below COMEX's low, that wick. But since I'm so close to the hourly, I'm going to place my stop loss below the hourly white line. I could give it a little room to breathe just below those 5-minute wicks. That's what I'll do. I'll bring it right down there. And then that will therefore allow me to increase my reward, maybe back up to that red zone. Okay, so I'm in a buy. I'm going to see if we can return it back up. If it comes back down, looking for it to grab a little bit of support, maybe here at that previous wick, you know, create a higher low. No, I went in early. I'm not on a retest or anything. Just saw that candle open bullish ignited. I went in. Shoulda, woulda, coulda, but it was a bullish ignited candle, pushed up, refueled. It came back up, refueled a second time. That's normally how I trade that when I see that, okay? So sometimes it works out. This situation, it didn't. Now, what I got to do is continue to watch these higher lows. Will it get a higher low, or is it just filling this wick and coming back down lower? That's what I got to watch for right now. There's nothing you can do while you're in the trade. I don't trade woulda, shoulda, coulda. I traded the ignited bar open off of the that big grab coming back up. Now it's coming deeper down in there, so I got to watch now. So this is position 1. If I get what I want it to do, if it comes back up, closes above there, then actually get a physical retest, I could take position 2. Okay, so I'm just putting it out there, just letting you guys verbally know what my intentions are. If it can continue to come back, close above here, retest this, and start that next wave up, I could be looking to take another buy position on gold as well. Okay, but this is position 1. I got to manage position 1 before I can go into a position 2. So that one I need more concrete evidence. I need to see the buyers close it above, then the retest. I went on this one on that return and that bullish ignited open that opened, came back down, refueled, came back down, refueled, and that's when I went in. But it was, I should have waited a couple seconds and then I could have avoided this. However, I'm in. I don't make excuses. Now I got to watch it. That's why I placed my personal stop loss below there. I gave it enough distance to breathe. I didn't over leverage my account. I'm still watching going into the close. So it did come down bearish. Got a higher low coming back up. 1 more minute to go. Where will it close? There's obviously more volatility, more range in the candle due to COMEX market open. That's why you can decrease your risk during news or exchange opens. So now we got to watch the close here. And if this body closes below here, unfortunately, where I bought up there, I got to make that zone above me red. Because then I know I'm trading into resistance coming back up. There's the close, so it did close below. So it's still red zone now. Sellers now have the benefit of the doubt. So it's a nice bullish candle, but you know, now we're trading back into resistance. So it could definitely come in there and go right back down. Okay, so we got to watch it build now. It's in a building phase. We need that higher low. We need this consolidated flag to build in here and then maybe take us back above there. News, yep. Not high impact news, but there is news. You guys are correct. We had the Empire State News, negative 8.7 from their forecast of a positive 4.3. That's the Empire State. So if you guys don't know what this is or what it is, above zero indicates improving conditions, below indicates worsening conditions. So it is a negative 8.7. So that's not good for the US dollar. It's good that we're in buys on gold. So what is this? It's a survey of 200 manufacturers in New York State, which asked respondents to rate the relative level of general business conditions in New York. So that's showing us not a very positive news. And gold has a nice bullish candle, but can we get that closure above? Because you guys know we're trading back into that red zone. It came right in there on that news, and then they rejected it back down. So let's see if we can get a nice strong bullish close above here, so that in order we can flip our red to green again, maybe possibly catch a retest. And you know, I was saying I could be looking for a second position if everything lines up. So it's coming kind of right back to my entry point. But that's not what I'm looking for. I'm not just looking for an entry point. I want to see buyers close above here so that I can flip my zone red to green, build off of this, and see if we can make our way back up to this yellow line and judge what we do once we get up there. And this is the first half of the candle. Okay, it's nice, bullish response. But again, I don't get excited about impulse moves. I get excited where bodies close, right? So I'm in a buy, so I'm following this. It went into a drawdown, but I've got to follow the close of this. Because I more importantly want to make this zone green below me so that we can build off of this and continue to drive, okay? But just measuring a move for, you know, like if you want to go to manage your risk, if we do get up to that yellow line, that's approximately 20 to 25 pips up there, okay? So that's if it builds like on an impulse, you know, or we can build our way up there, okay? So it was a really nice bullish candle coming out of that news, coming out of also when COMEX, you know, opened for the first 10 minutes. But the closing price is going to be more important than anything. And 60 more seconds. So this previous trend line was representing those 5-minute ones, those 5-minute ones right there. We broke below it. If we can get that blue volume closing above, you know, up here, then we're above the trend line. We're back in there. We could convert this box red to green, maybe build off of this and get us to that daily point of interest and see what happens up there. But they've rejected the move coming back down. You know, if the volume closes below that trend line, bears are still in control. Closing price, 35 more seconds. The zone will remain the same zone. I'm not changing the size of the zone. I'm just going to change the color, right? I'm going to make it green if we close above here to represent that if we pull back in here, it could be starting to another support zone. The buyers could be accumulating in there. We could look for possible retest off of there, but ultimately it's going to come down to the close. 10 more seconds. See how they're pushing it down? Let's watch where that volume will close. Above the trend line, above the zone, at the high, back down. Here's the close. So it did technically close above red box. I'm going to go green. Okay, so we opened bullish. We haven't pulled back down into the green zone yet, so it's still got the bullish body. Can it maintain its bullish open and continue to fill the previous high wick? And then we could be technically trading right back up to that yellow daily line. However, as it came up, lower high, they rejected it back down. So it could be coming down to retest back down into this location, green zone, right? That was the first body, that candle that closed above. So we haven't had a retest yet. As it pulled back, shallow pullback, higher low, continuing to fill the wick, maybe we'll get it right back up to that yellow line. Okay, so you see this red zone kind of just now extending it right into the future. We're walking right into this red zone right there, yellow line, 200 EMA now. So that's our resistance above us. Can we continue to rally with this move and maybe physically close it above this red zone, get the buyers back above the daily point of interest, back above here, and then we can maybe flip this red zone green, and we're building our depth of market. Okay, so that's approximately 25 pips. If it breaks out a little more, right up there is about 30. Okay, so this is when you can start to reduce risk, if you guys like. If we're going to trade back into 50% of that bearish candle, right in there, that's a target, like into that 50% of that bearish candle right there, right? That's about 37 pips up there. Okay, so I haven't reduced my risk as of yet. Maybe I'll wait for this candle to close. Might be a mistake on my part, but let's just see. If we can get one more push above there and break out, then I'm going to start reducing my risk. I might not go to a direct break even, but what I'll do is I'll decrease it from here and I'll bring it maybe below this red line. Okay, so it's coming back up. Please, guys, manage your risk for your own accounts too, please, guys. You know. Okay, good push, good push. So I'm going to start to reduce right there. I'm just putting it below that red line. So you can see I've reduced my risk where I was below there by almost 25 to 30 pips. So I've taken that much risk out of the trade while I'm up over 30 pips, right? So just got to continue to manage this. If we're still holding it, we've got to wait for the body to close, okay? I haven't taken out any partials as of yet. Maybe I'm looking for a target up there. But ultimately, if this body can close above here, I flip this zone green, could build off of it one more time to maybe take us back up here, okay? So good return out of COMEX and news. Good bullish push. Okay, so red line is representing 50%. Remember, I've got a high wick high. Can we break through there, okay? And that's approximately a measured move from entry, about 37 pips up there. If it can get up to those bodies of interest, that's 45 pips right up to those bodies, okay? Good bullish candle coming out of there. Great candle. Captain Boom, close enough for a daily 1%, run at break even. Perfect. Nothing wrong with that, sir. Samuel, 25 pips for you. Good job. Yeah. I went in a little too early. I went in on that ignited bar, I admit it, but it's kind of what I look for. That big return off of that previous candle, ignited. Guys, I got to do something, okay? So it's at that red line, okay? So I'm going to take out 80% myself. I'm taking out 80% and the remaining 20% at break even, okay? So that's perfect, guys. That's a good 40 pip trade. And I've taken out 80% in my pocket. The rest, 20%, I hope it runs back to that daily high, is at break even. It did encounter some unrealized drawdown, but notice where I placed my stop loss below that hourly white line. And so I encountered drawdown, but I positioned it below there. But now we're back in profit. So now let's watch this thing. Let's go through our motions. Are we going to close above this red zone? Can we make it green? Are we going to close above this red line? Maybe if it closes above there, we'll get some quick bullish candle, open support, and continue to run. But guys, I hope you guys, at least went to break even, learned how to manage your risk. I hope for some of you guys learned how to take some partial profit out of the market. And let's just continue ride this thing risk-free right now and see where it can go. But we got news supporting the move. So it did close above. So notice what I'm doing. Red to green. Okay. So I can see it's trading in it right now. I'd like to see a wick right at 50% right there. Our wick is perfectly at the 200 EMA. For some of you guys that use that. I'm looking at my points of interest, not so much the EMAs. I look at the yellow line. That was now a daily position, okay? So we broke below it. The sellers were in control, pushed it all the way back down. Buyers brought it all the way back up with some volume. So now are we going to make this yellow line into some support going forward? Support, support, support in order to take us back up to maybe the highest point, like back up to that red block or to the highest point, okay? So now it needs to transact in here. Okay, great wick coming out of there. So you see how it came in. Good wick. We've got a nice bullish hammer candle, but notice the size of the wick behind us. Okay, it's a long wick. It's not one of those short ones that when you get that return, it fills it up and then it just drives. So we got to fill back up. It's like climbing a mountain. We got to climb back up that mountain, climb up. But by the time we get up there, we might exert all our energy and we get tired. Then a seller will come in and push us back down. So we're filling up. We're climbing up that mountain. Can we get right back to that highest point and break out a little further? Okay, and continue to push for a new higher high. So it's a beautiful candle, beautiful relay out of that green zone. Perfect. The buyers are doing their job. It's just we got to continue to ask and trade above 36.44.50 in order to continue to create new higher high and drive further. But that's the size of the wicks. That's why wick analysis is very important. It's a beautiful candle, but remember what I said, we're climbing a big mountain. We got to continue coming up there while we're getting pushed down. When you're climbing a mountain and someone is at the top, keeps pushing you down and you roll down and then you get back up and you drive, and then there's another person up there pushing you back down. I know it's I do it with my kids. We have fun on the mountains. Whenever we go snowmobiling and jet skiing and things like that, they come up there and then I kind of push them down. It's fun watching my son roll down the snowy hill. And then he gets pissed off and then he comes back up and I'm up there and I push him back down. And then he gives up. He's like, I'm not doing this anymore. So think about that. Like someone is up there. No, I don't. I play with them, okay? It's games we play. My dad used to do it to me too. So, but that's right there. We're climbing back up and you see that lower high and they push it back down. No, Christoph, don't beat your kids up. No, it's just playing fun. They have their snowsuit on and I roll them down the hill. And it's funny watching them. But that's the type of analogy what I'm trying to say here. Maybe it was a stupid analogy, guys. It's a dumb analogy. Yeah, you guys can say I'm a bad father. I'm a fun father. Go out on the snow hill where they got their snowsuits on. We have fun. I roll down the hill too. I tell them, push me down. It's fun. That's how you learn. You learn. You roll down the hill. You're going to get some bumps and bruises. Makes you stronger. So now you see my kids are coming back up. And then you know what they're going to do to me up there? They're going to push me down the hill now. They're going to reverse it. Okay. But those are those equal highs, guys. Okay. Those are those things I hate are equal highs. Okay. Because it made it all the way up, And you see when it got right up to that highest point of that mountain, they couldn't just take it out just a little further. So that's telling me that those sellers are positioning themselves to not allow this to go any further. So the buyers got to continue. There's that push out and there's that breakout. That's when they push dad down the hill. This is me now falling down the hill. So my kids now have pushed me down the hill and they're laughing at me. Okay, so those are stupid analogies, but whatever they are, we're up 45, almost 50 pips. Okay, if it gets up to that trend line, that's 50 pips, right? I'm a great father, guys. I'm a great father. I just have fun with my kids. Okay, but as you make that higher high, it gets rejected. Now we got to watch the closing volume in the next 30 seconds. So guys, don't be, scared to take some money out of the markets. It's running approximately 45 to 50 pips. You can be taking some out because, we could be still in this range where it comes up and then we get another leg pushing right back down. We're seeing it all morning. This was bullish, it came back down bearish. This was bullish, came back down bearish. This was bullish, came back down bearish. We got the next bullish leg coming right back up. So it could come up and it could come right back. Ignited open, guys. Here's the clues, okay? So we got an ignited open, flip, pop that wick, and drove right up to that hourly trend line right there. That's approximately 50 pips, guys, okay? So you can definitely do something out there, or you can continue to ride this with a trailing stop loss or your break even, okay? Came right up to that trend line, lower high, and pushing back down. So are we going to continue to build this, or is it going to come tumbling back down? If it comes tumbling back down, you got your green zone and your daily point of interest to hold you for support here. If we lose this, then unfortunately we'll come back down to where we started the trade right there, and the break even can get stopped out, okay? So hopefully everyone is now at a break even. When you're up 40 to 50 pips, it's go to a break even, okay? Now we're coming right back up to the 50 points, right? So we could drive, back up to that red zone. That would be about 60 pips. Guys, I'm going to close my entire trade up here, the rest of the 20%, because I need to go to the washroom really quick, and I want to just close this out. So then when we come back, we're going to do NASDAQ and US30, and I want to be out of this trade. So I just closed out my remaining 20%. I am out of this trade completely. Got that money in my pocket and I'm happy. I just need to go to the washroom, guys. If you guys can give me like 5 minutes, just going to go to the washroom, stretch, come back. We're going to do our NASDAQ and US30 analysis and get ready for Wall Street. Okay, guys? So put a W in the chat if you guys are at a break even, if you guys grab some profit, if you guys understood my analysis. I know it went in drawdown at first, but the reasoning being was, remember, it was that I like that return on that candle. That candle turned bullish, ignited, it came up, it came back down, bullish ignited, refueled, and then that's when I went in. Had I waited, I would have seen it come down, then I would have maybe gone back in. But regardless, shit happens. I don't make excuses, guys. I explain things. So whether it's in profit, drawdown, break even, I explain it to you. You have my thought process. I also told you guys where I scaled out 80% and how I closed my entire trade because I got to go to the washroom really bad. So I'll see you guys in just a couple minutes. But that's a big target, guys. That's a good target. Okay, I'll be right back. Thanks, guys. Guys, we're back. That was me calling Dave, the market maker, to pump gold. Holy shit. Look at that move. Wow. Holy. I feel silly now closing it, but that's 100 pips, guys. So I just called the market maker, Big Dave, say, pump it, pump it. Dave is pumping this thing. And I got my favorite, guys, Sour Patch Kids right there. So I took them from my kids right now. They're at school, so I'm going to eat their Sour Kids if that's okay with you guys. Do you guys ever steal your kids' candies? I do. So I'm that guy that rolls them down the hills, but I take their candy too. Right there. That's a wicked pack. You got those sour watermelons, Sour Patch Kids, and the cherry blasters all in one. I love it. They go to school and I go now. I go in their closet and I eat all their candy. It's so good. Guys, wow. Do something, you know, like hint, do something. That's 100 pips, okay? We called Dave to pump up the markets. Big Daddy Dave moved them. We caught the buy on the low. And 100 pips, guys. Convert your zones, right? So we broke the daily high. Nice impulsive move, not bad break. But if it comes all the way back down to retest, go with this red zone green, please. Sherry, you don't eat candy. You're too healthy, Sherry. I envy you. I'm jealous. I have a big sweet tooth. I'm big on candy. Oh man. I could eat this whole bag right now. It's so good. Okay, guys, I'm not in this trade. I hope you guys are. I hope you guys benefited out of it. Hope you guys did good. Don't get too greedy as well, right? Look at what we just hit. A psychological number, 3,650. Okay, so if you're in that trade, please, you know, like secure a little bit, okay? Because what goes up can come right back down, right? So great job, guys. We're going to shift focus to our indices in just a moment. But just to come back to that gold signal, okay, so it broke out of the resistance. So you can see from the call out over here, it's came back up. Now you got some confirmations to trade off of that 47 area. So here's the 47. We closed above. Now if it ever comes back down to potentially retest here, you could be buying out of there, right? So you can patiently wait for a retest. We went in a little lower. We waited for it to come down, and we just continued to trade with the trend, right? The trend was showing us. So this kind of like a recap where we placed the trend line was showing right here where it started at the lowest point of the day, made a higher low, made a higher low, the higher low. We could not break above there. Then it kind of came down 7:45. Notice time 7:45, 8 a.m. Came all the way down. Here was COMEX. You know, came down, higher lows. And then news, they dropped at 8:30 with the Empire State Manufacturing. Came out very negative for the US dollar. And gold pumped right through there. So congrats to everyone for number one. You know, first of all, if you did your daily analysis over the weekend, maybe you had your correct points of interest, your correct zones. That's what I asked you guys to do on the weekend. I want to say congratulations to those guys that did that. That's awesome. And also, you know, just trading with the entire trend, you guys managing risk if you want to break even, and you guys did secure some profit. That's perfect. That's what you want to do in trading, okay? I know we all want to hold this and want it to go to all-time highs and continue. But one thing you got to learn in trading, and you're going to learn it, okay? I can't teach this, is every time we get greedy and we get greedy and we get greedy, sometimes the market will punish us, okay? So you can see I'm not a greedy person. As soon as it started to break out of there, I grabbed my my money and I ran from the markets, okay? Could I have held longer? Yes. But sometimes when I do that, then it comes all the way back down and hits my break even. So I kind of wanted to start the week off with a win, start off Monday on a positive, so it's good. It carries momentum going into tomorrow and things like that, okay? But guys, I'm going to go off of gold now because it's 8:55. We got a lot of work to do. So we got to get now back onto our indices. We got to chart now NASDAQ and US30. So if you guys are in gold, please manage it. Watch this psychological level, 3,650. If you get any pullbacks back down to 36.36, 36.47, it could be, testing this prior resistance, turning it support. You could get a pullback buy. It looks like that 9 EMA wants to drive back up there, maybe hang around that zone. You could get possible pullbacks, okay? So I'm shifting focus off of gold, guys. I trust that you guys can continue to do your analysis. Hit the likes in the chat. We have 540 viewers. Subscribe to the channel if you haven't already. Let's try and get this up to, our goal was 400 today. I don't know if we have enough viewers to get it there, but we'll try for 300. So 20 more subs, we're at 85,280, okay? Let's continue on our goal to 100,000 and helping everyone around the world by learning a financial education that can hopefully add a supplemental income to your family, help you out, pay some bills, and maybe get you financially free in the near future, okay? I'm not making promises. I'm not saying everyone's going to be financially free. I'm not saying everyone's going to make a lot of money in the markets, because that's not true. A lot of traders do lose a lot of money in the markets. But if you have a sound plan, if you know what you're doing on a daily basis, you have proper risk management, and you have daily goals, you're well on your way, okay? So I'm going to move over now, guys. We're going to do a top-down analysis on, I'll start off with Dow Jones. I'll move into NASDAQ. Hopefully you guys did some charting on the weekend as well. Maybe we can line up our charts together, see if we have similar points of interest, points of control, zones, all of these things, okay? So I'm going to get started with Dow Jones, US30. Eventually, guys, in a couple weeks, we got our trading view all set up too, where we'll do futures with you guys. If there's enough interest on YouTube, we can do futures with you guys where it's not delayed, it's the real-time data, and then we can start looking at YM, NQ, ES, GC. We can start looking at future charts as well with Forex, and do both of them for you guys, okay? Now, let's get started. This is how it is on the 5 minutes. It's moving. Some of you guys might be trading it right now too, but I can see that there's big resistance up here. But we're going to start off with a daily, okay? So if you guys are with me, I'm going to the daily now on US30. Some things that we're going to talk about that we always talk about was, what are zones? What are pivot points in the market? Yeah, I'm done with gold. I'm done with gold. So I'm leaving it up to you guys to manage now, okay? We're going to move on now. We got other business to do because we still have Wall Street market opening up, okay? So we don't just trade gold all day, okay? We switch it up. We show different things that we do, okay? Now we got to show some respect to the Wall Street market opening. That's why we give respect to NASDAQ, US30, S&P, whatever you guys are trading, okay? Right over here, guys. So the size of the zone, again, they matter. The size of the zones. Why did I determine this zone? What was the date here? I know that this was December of 2024. That was a previous all-time high. What were the results? It came out of there. It came back up, back in here, February of this year, and dropped. So that's your double top drop, right? Same zone. That's why, get in the habit of stretching it into the future. You see, we came back in here early July of this year, back down. We transacted back in here again, end of July, early August. What were the results? Back down. We came in here again, mid-August, couple impulse breaks, no blue volume close above. Finally, this candle should be ingrained in everyone's head. You should know exactly what this big bullish candle is and represents. This was Friday, August 22. Go back on your calendar and look. What happened on this date? Guys, this is part of your education on the weekend. Anytime you see a big bullish abnormal candle like this or a big bearish candle, go back and just look. Was there any news on that day? Was this just an abnormality? What caused this candle to do that? If we go back and we look at this, we know we were trading this live. You should know what happened. This was day 2 of the Jackson Hole Symposium, where Powell, who's doing FOMC this Wednesday, he was speaking here. And this is where that event is 3 days. It's a Thursday, Friday, Saturday event held once per year in Wyoming in the United States. It's called Jackson Hole Symposium. All of the big wigs around the world, all the financial big wigs get together, and Powell was discussing globally what's going on with monetary policy. He was speaking very dovish. He was hinting at a rate cut coming in September, which we have already baked into the price right now. So you can see how the market reacted, very bullish. Did it close above? Yes. So when it closed above, you can go green now, showing how it holds support. Then you can see 2 days later, came in here, caught a wick, came back up, came in again. September, start of September. Remember, September 1st was Labor Day, markets closed, U.S. banks were closed. Next day we opened. Look at September, came right in 50%, back up, and since then we've been driving. Here was another big day, Thursday, September 11. There was some news in the markets last Thursday. Again, go back and review, see what it was, right? We had PPI, CPI data last week, so the market continued to push up. Now zones of interest, 50% of that zone, you can place a yellow line, point of interest, daily. I place an alert. Is the US30 ever going to come back down in here? If it does, I want to be ready. 44,000, around 950, 945. I'm ready to see what happens in there. I could be buying a nice discounted pullback in this zone. Now, again, points of interest. Look above here at this at these bodies. Okay, so place a yellow line right here on Powell's day. Right up there. It closed, next day opened. I see impulse wick, impulse wick, impulse wick, impulse, body close at yellow line. Another impulse, body close below there. We had that big day on Thursday of last week, close us above there. So this yellow line is a point of interest, could be support going forward. Now you see I have a wick, a wick, a wick, a wick. The wicks are relatively all the same size right there. If I draw a box from all of those wicks, notice what I did there, okay? I make it red to show you it came in there, back down, came in there, back down, came in there, back down, came in, back down, came in, back down, right there. Stretch that zone across and make that a green zone. So now we've got a zone. So if we continue to trade in here, this could be a buying area. Right now, we haven't kind of transacted back into the green zone. How can I see that? Because I can zoom in. I can see today's low has not transacted in here. So again, what do? I want to place a yellow line maybe at 50% of that zone. 45,700. Right click it, I'll add an alert in there. If I do get alerted in there, it might be a possible buying opportunity out of this green zone on the lower time frames, okay? Now let's figure out what's going on since last Thursday. We know that we're trending up. You can draw a trend line from here, here, here. You can see it's ascending, it's continuing. It broke out of that resistance, very similar to our gold trade that we just had on the 5 minutes. Same thing, we weren't breaking above that 36.46, if I remember the number, 36.46.47 on gold was resistance on all of those 5 minute candles. Then we had that news, that dip, bought it right back up, and we broke right through there, okay? So on the daily, look at, we broke right through here. We have a new all-time high, okay? So this candle took us to the all-time high. Let's place an orange line at our all-time high. There it is, 46,138, 140, all-time high. Since then, you see from the all-time high, I got a body and a body. So there's a small little red zone from the all-time high right there to those bodies. I know it's a smaller zone right there showing me where's my all-time high supply zone. Now, following the bearish candle that came down on Friday, okay, you see US30 was bearish. How far down? Let's look at 50% of this big bullish candle, guys. So grab your Fibonacci tool. I have mine kind of just swapped out for a different way. So see how it's showing me the 0? I bring it all the way up to the 1. There's exactly my 3 lines that I'm looking for. So I took away the 236 and I took away the 786. I just have on my chart the 382, the 0.5, and the 618. I explained that earlier in the call. I can do it again tomorrow morning when we start. But right now, okay, so you see how the yellow line, which I did place in there, about 50% of that green zone, it's now representing the 382, okay? Where's 50%? It's basically, look at right there. There's the 0.5 of this big bullish candle, and it's showing me that it's today's low. That will be a purple line soon, and it's right at that 50%, okay? I can draw a bullish zone from all of that right up there to there. You know, then I got 2 zones. So this might confuse people right here. If I put another zone right in there, it's a lot of green zones. So someone's going to scratch their head and say, Ron, why do you have so many zones? This one is a zone that was created back here in August 22. So this is a higher time frame zone below me, still holding. This one, this zone right here from here to here is just representing last Thursday's bullish volume, okay? But it's still technically holding. If you want to have two zones, you're welcome to. If not, just get rid of this one from Friday, but just understand it's still strong, still showing bullish momentum, okay? So now what I want to do is maybe figure out where's 50% or the bearish control of Fridays, because Friday was bearish. We say open, did not take out the all-time high, got rejected, came back down, bearish, 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 and closed right there. So we still have this bearish volume above us that we're trading into right now today. So let's, again, grab your handy Fibonacci tool. This is going to be part of Wednesday's webinar, going back to school. We're going to learn how to utilize our toolbox, put our favorite tools. This is my toolbox down here. It's kind of like a pencil case. When you go to school, you've got your ruler, you've got some brushes, you've got some markers, some highlighters, you've got a protractor, you've got stencils, you got all kinds of shit in here. This is our pencil case. We're going back to school, okay? So that's my toolbox. Or if you want to use an analogy, if you're a construction worker, you got your tool belt, you got your hammer, you have all of your tools, your tape measure, everything while you're working. So same with us. We're tradesmen in the markets, and we have to have our tool belt as well, right? So we want to have all of our tools handy so we can analyze the markets quickly. Have your favorite tools, and we'll also talk about favorite indicators as well on Wednesday, okay? So it's going to be part of our going back to school, going back to trading. So right there, there's 0.5. So have a yellow line as a daily point of interest. 45,967. I could draw also a bearish point of control coming off of Friday. Again, it's right there. Look at today's high is almost tapped right into there. Could be coming in now for Wall Street, okay? So that's our zone above us. Now I can see how we opened over the weekend. What happened? There was Friday's close. See the close and the open. They gapped it down, right? You can see the gap down. If I have this where they closed it on Friday, it doesn't look like it transitioned into 831. Looks like a gap down open down to 816. So it looks like they dropped it 15, 20 points down, gapped it open. And when we opened, it was initially bearish, 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 where we made the low of the day. So there's my purple line representing the lowest point of the day so far. I can still see if we have not transacted in this big green zone. So it's got a higher low coming back up to the opening price. It filled that gap imbalance right there, filled it right back up. And you can see how strong today's volume is, where we came all the way up. We've already hit a high point. There's my highest point on today's daily candle. And you can see we're right below the point of control, the bearish point of control from Friday. So are we going to continue to come and transact right up to that yellow line, 50%? Are we going to get to the top point? If we continue to break out, again, guys, cut that in half. You know, if you're an intraday trader or you're a scalper, maybe halfway right there, okay? You don't even have to bring out your fib tool. Just look from the top of this red zone, bearish point of control from here to up there, and that's the halfway point. Like, for example, if today is very bullish, it might be bullish, but we're still may come through here, tap right into there, and that's it. And then the market comes down with a lower high and back down, and then I know that the market makers are protecting the all-time high by producing a lower high right there. That could be a possibility, okay? Or it could just continue trading back up there, okay? But first, in order to entertain all of that up there, we haven't even transacted in the bearish point of control from Friday. Maybe Wall Street will. Maybe we'll come in here, get rejected back down, and as sellers continue to absorb all these buyers, flip the candle and we're going down bearish today, okay? Or what we're saying is the markets could trade near the highs, and then it could be a sell the news event on FOMC on Wednesday. So today and tomorrow could still continue to be bullish, driving all-time highs, driving the market up, and maybe during FOMC, they might sell the news, okay? That's a possibility, okay? Or they bring it down, and with FOMC rate cuts, then they bring it right back up. It's tough to say right now because we're still 2 days away from FOMC. But what I like to do right now, one more thing I like to do on the daily is I measure the current volume going into Wall Street, and I figure out where 50% is. opening balance where the volume is right now. I know the price is moving. It's fluctuating right now, so this is not 100% accurate, but it gives me a good perspective of where 50% of today's current volume is. It's at 45,865. So if it comes back down bearish, maybe at this yellow line, the buyers step back in at that 50% of the current volume and buy it right back up, and we're coming back up. If we lose 50% of this volume, then it's got a high probability sellers might push it back down to the opening balance and maybe come target the low of the day. Okay, so that's how it looks on the daily now. It's obviously still in an uptrend. Nothing has really broke down. There's a lot of black candles, but you can see black candles come down. It's a higher low, goes back up. Here were black candles. It went back up. Here was a black candle. It went back up. Here were black candles, came into that nice deeper depth of market. And what were the results? It continued to drive back up. Friday was a bearish candle, but now we're coming right back up. But you can see we're trading possibly right back into it. So now on the 4 hour, yeah, guys, I got to go faster because it's on 9:12. I got to continue moving. Okay, so on the 4 hour, right over here, I can see Thursday, 6 a.m., 10 a.m., Wall Street. Then we started to pull back down on Friday. There's the Friday pullback, and slowly we're coming up. Now I can start to pinpoint how it was trading 10 p.m., 2 a.m. I can see London. I can see European volume. There's 2 a.m. coming all the way down, closing at the high at 6 a.m. close, and then right now it came back down. So 4 hour candles are pushing up. But look, guys, look at the pattern on the 4 hour. How can you not recognize this? There it came up, top, came back down, neckline, we're coming right back up. Are we going to counter ourselves right back in this red zone, and then they push us back down? Okay, and then there's that lower high, push down. We're looking to break this, and then you come in that deeper green zone. That's where it could be. But however, what if we break out of here, and maybe we're closing above, and then we're gonna make that red zone green, invert it, and then we're coming right back up to the all-time high. Okay, that could very well happen. What if they're designing a second top or engineering a second top going into FOMC, right? When we said buy the rumor, sell the news? Look at this shit. What if we're coming up, they came back down, slowly maybe they're gonna bring it back up. This is Monday, Tuesday, coming in here, maybe they'll break FOMC. We know it's going to be a 100% rate cut, but how much? And then it comes, maybe they take out the liquidity, new all-time high, and then sell the news, and then markets dump after that. That could be a possibility. That could be a possible path, right? So, you just got to continue to follow. Right now, this is what we're going to watch in Wall Street. We're going to trade in this. Are they going to reject it back down? We do have our daily support levels to look for levels below us. Now what I do is go off of the 4 hour, go back into the 1 hour. Now I see there was the big, huge move, okay, from 9 a.m. Thursday. Continues. Look at the pullback so far. Okay, so you can see basically it's pulled back almost 50% in that point of control and coming back up. Look at this hourly candle. What happened at 4 a.m. today? Look how bearish this was. That created the low of the day. They took out that liquidity down there, and then it came right back up and it closed as a bullish pin bar, pulled back down. We're holding that higher low, and look at going into Wall Street. It's attempting to maybe come into this selling zone, but maybe squeeze through here or get rejected and come back down. So right now, you can see on the hourly, had that huge bullish move. Consider that all one top, this whole one leg down. There's our, our structural area right here. We're coming back up. Is it going to come in here today and break out of this on the hourly? Or are we coming right in and sellers are going to push this thing right back down, right? So we really got to pay attention to this red zone today on US 30. See what they do. Do we have hourly support so far last few hours? Yeah, right there. There's a body. Have a white line. White line represents hourly right there. 45,897, give or take a few points. 900, psychological area. White line. There's a body close, body open, body close. Look at this. This body close came all the way down there and closed right at that white line. Next one open. So that's our hourly support right now. 45,900. It's holding currently. Okay. So we'll see if we can continue to take out this daily high drive. If we're scalping or intraday trading in Wall Street, if it's bullish, right there, you got a wick to fill, and then look at that ignited bearish body and body. Have a white line right here. Why? You have to. You don't have to, but you got to, okay? 45,950, psychological number, and then there's a bearish candle close, and that's where that ignited bar started that pushed the market down. Look at when it came back up there. It was resistance, pushed back down. So if we're coming through here again, there could be hourly resistance and they push the market down, then I know that they're protecting that daily point of interest. Okay, if we break through that white line, yes, could travel right up to that yellow line, and then we identify what happens up there. Okay, right now in the 5 minutes, this is what we got going on. Okay, so there was that big move that happened right over there, 4 a.m. I'm not sure what happened. I was sleeping at that time. I got to go back, look at 4 a.m. Was there some news? What happened there? But it came all the way down. Since then, we've been building to that highest point, come back down. Still trending up. You can see higher low, higher low, higher low. If you want to draw like a trend line, you know, coming there to those bodies, still technically holding right there. I didn't go down to lowest wick. I went where the body closed, body opened, holding it. That looks to me like they just broke that for liquidity reasons. Still holding. So we are still in this, you know, short-term uptrend. But we have this massive red block above us from the higher time frames. You can now look at this, guys. If you're looking to sell, you can look at it with this perspective. Consider all of this as one top. There's your neckline. Consider all, this is a double top right now, but consider it all one top. And you could be look, see how it's pushing down. This could be like that gold where it broke the trend line like this and then come back down. Okay, that's possibility. You could also look at it with this perspective. Okay, two tops. It came up right there, one top, neckline right there, the hourly white line came up right there, second top. This is the M pattern coming down. So it might break, you know, the hourly, come back down, and then sell off during Wall Street market open. Okay, so we got to watch that. However you look at it, this daily high is still holding. Bigger 4-hour block is above us, and now momentum is pushing to the downside. Okay, so that's US30. I'm going to add our SST daily bar indicator. Just a reminder of where we opened. We came down. We made the lowest point of the day. It came back up to the opening position. There's our highest point of the day, and so far we're getting rejected right now. Remember this line, this 865, that was representing 50% of the current daily volume. Okay, so that's still holding. And then adding our EMAs, 9, we're below the 9 EMA, and the 200 is right there. Okay, so I will revisit US30 in a moment. We're going to leave it right over here to the left side of the chart. Get ready for Wall Street in the next 13 minutes. I got to do NASDAQ now. Let's just take a look at gold one more time. So gold has not reached, oh, wow, did it tap into that? That was a bearish candle, bearish, bearish, bearish. Almost tapped right into that green zone, but came back above bullish. So, you know, on the 5 minutes, right there, you can clearly see that they're creating a little bit of support on the 5 minutes right there. You got a body, a body, a body, a body, and a wick. So it is still technically holding structure right there. So it's now consolidating. Bullish, bearish, could consolidate and continue breakout to the upside. However, if this breaks down, could be selling back down to this green zone, maybe a little bit down, further down. Okay. Now I'm going to do NASDAQ. Okay. Let's do NASDAQ. Okay. Tech is on a tear as of late. Oops. I don't want to change my US30. I want NASDAQ. Okay. Here's NASDAQ. It's driving on these 5-minute candles. Let's go back to the daily. Guys, hit the like button for the US30 analysis, because now we're going to do NASDAQ. Wow, okay, so this thing has been on a tear. Here was NASDAQ's double top all-time high previous supply. Very similar to US30, December 24, first top. Over here, February 2025, second top drop. Going across, you can see then start of June, end of June, we got volume closing above. So you can see NASDAQ was much faster than US30. Tech was in demand over the summer, and you can kind of see the results of it. Unbelievable push. So you see how I just now converted that zone green, stretch it into the future. I could do the same thing, what I always do. Again, 50% of the zone, yellow line, point of interest. Right click, add an alert. If it ever comes back down to me next week, next month, next year, I'm ready to maybe possibly buy that pullback at 22,000. Okay. Now what I want to do is pivots. Okay. Pivots. Let's do NASDAQ a little different top-down analysis. Let's follow this leg coming all the way up. Right there, it stopped. Let's draw a pivot point of interest right there. Okay. See how it stopped? I see an impulse break, but I'm not doing anything with the wick. I'm looking at the body. close, body open. Then we had these 2 bearish days come down. See again, I'm not doing anything with the wick. I see it stopped right there. There's the pivot point, stopped, point of interest right there. Come back up, came back up, took out. See, now we got a blue bar closing above the yellow line. See how the yellow line holds as support to take us back up. So that was a previous all-time high that we hit on August 13. Now it's a point of interest right there. But notice what I do. I come down to the bodies, body, 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 and a wick. Then we started this bearish leg coming back down right there. See where the bodies stop? Right there. See, now I have a wick, a wick, a wick, a wick, and those bodies right there to that point of interest. Now you've just located a demand zone. So you see how points of interest can lead you into finding demand zones. How did I figure out that that's a demand zone? Well, the candles are telling you they leave footprints behind. You see, when it came in here, what were the results? Buyers brought it right back up. Look at the wick. Came in here again. Buyers brought it right back up, closed there. Third time it came in here, buyers brought it right back up and closed it above there. A fourth time it came in here, green box, it went back up. So why don't we stretch this green box into the future? The wicks are telling us that that's where a lot of rejections are, and buyers are happy to get filled at 23,000 for NASDAQ, and look at where it's going. It's now we're at trading at a new all-time high right now. Like, I can't even, I'm going to place an orange line at today's top wick. That's an all-time high. It's unstoppable right now, okay? That's an all-time high. What is it? 24,165. Now, it's just parabolic from Thursday, Friday, and today. So look at, guys, if you're looking for fair value gaps, imbalances, look here. There's two options of doing this. You can do it my way or you can do it your way, right? You can see right there where it pulled back, okay? Today's low, I'm just showing you. Today's low is a purple line, right? There's today's low. What about Thursday's high? Thursday's high. Draw a yellow line right there, just so I can get you guys to look at what I'm looking at. See the meat of that candle right there? That's untapped volume, has not been transacted. That's what you guys call a bullish fair value gap, right? Am I right or am I right? Okay, wick, that's now. Maybe we're going to see if it comes back in here, if they invert this, whatever you guys call it. Or you can do it my way, okay? That's one way. Sorry, guys, I got to be quicker here. Or my way is, if you can't justify with the wicks or anything, if that's confusing, do it my way. Just go from the opening balance of that bar to the closing balance of that bar. And look, it's the same exact shit. Nothing. Look at it. There's 0.5, okay? So there's 0.5. And look at the 382 and the 618. Just a little bit lower right there, okay? See, that's my zone. That's how I do it. But if you do it the other way, you're giving yourself a bigger zone, right? So there's nothing wrong with both of our styles. You're right and I'm right, okay? We're figuring out that bullish point of control. Now that I see it, okay, let's open it up right there and right there and stretch it into the future. Now let's follow what happened. Friday was very bullish, came right up there. Okay, so that's a point of interest. That's Friday's high. It's still fresh in the market. This might retrace back down and be support later today, 24,140. So I see Friday came up, got rejected. There's the closing price. Points of interest. Friday closed there for a reason. We had a Saturday and Sunday. We enjoyed our weekend, and then we opened up right here for a reason. It opened up 24,093. It was initially bearish, bearish, bearish. There's my purple line, low of the day, top of that green zone right there. And what were the results? It came back up to the opening balance. Look how strong and bullish, say, going uphill against that wick, that uphill analogy I told you with my kids. It continued coming up, coming up, coming up. They broke it out. They got the momentum, and we're at a new all-time high right now. So if we continue Wall Street breaking out for a new all-time high, now this is price discovery. We've never been up here. Now we got to use psychological numbers. So all-time high is 164. Easily, like you should have 200 marked. That's your next psychological number, 200, not too far away. You could just break out 30, 40, 50 pips to 200. Next one would be, you could even increase 200 to 250. I would give it maybe 250. You know those 25, 50, 75, 100. So go to 250. Maybe give it a little 250 right there, okay? So let's see if the buyers can continue all-time high to get it up to 24,250. Then you go in your 100-point increments, 300, 400, and your next big one would be at 24,000. 500, right? So it is very bullish, okay? We are trending very strong. You know, the daily candles, if you look at your RSI indicator, we're at 66, 67. We're not in overbought territory yet, so it could still continue to drive. Pullbacks could be buys, okay? Maybe they're driving this Monday, Tuesday, FOMC, sell the news event, and then they drop it. Could be a possibility. Now I go into the 4-hour candle. Where's all this 4-hour volume coming from? All week. We can look at beginning of September, coming up, pull down, higher low, new higher high, pull down, all higher lows, continuing trading with the trend, breaking above Friday. Let's see here. Now let's go from Europe. Right here, big candle. Europe was bearish. It opened, it came in, 4-hour volume came all the way to the lowest point and closed right there. This big candle, this is representing pre-New York, 6 a.m. Big bullish move in New York, coming all the way back up, engulfing all of Europe's volume, hitting the all-time high, and could possibly continue to drive. Our 4-hour candles are now getting overbought, but that could still, if you're selling in an overbought territory, this is signaling strength, not just overbought. So you could be selling into strong buyers that could continue to take this thing for new all-time highs and squeeze short sellers. So on the hourly, this is what we got going on. There's the drop now. I can see London was a bear shooting star candle. 4 a.m. was that big drop. 5 a.m. little consolidation. There's a morning star pattern. Learn about your 3-bar plays. That's a morning star where you got a big bearish candle, you got a little inside doji, and then you got a following bullish candle. It would be better if the bullish candle would engulf, but still it closed above 50%. I can see that. And we continued off of 6 a.m., 7 a.m., 8 a.m. Guys, if you want to find an hourly fair value gap, it's right there. Wick. If you want to find an hourly fair value gap, maybe for a retracement on the 5 minutes, it's right there. See that? Wick and wick. I normally go from the opening balance to the closing balance, but if you're doing the fair value style, there's your style. It's right there. This part of this candle has not been tapped into yet, so it still could be a block holding in the market if we do retrace down. Now, this last candle, let's get 8 a.m., 9 a.m., 50%. What I could do is I could move my daily position right there. You see, now it's representing London's high. It's right there, cutting it in half. I can get my Fibonacci to verify this. Open closing balance, 50%, perfect. Now if I want to grab that 8 a.m. bullish point of control for Wall Street, it's right there. So I'm getting my blocks. It's best advice to be buying in a bigger block down here. It's better to buy here and here, but you know, sometimes we'll get a shallow pullback. This might be the zone and continue to drive. Okay, so right now we've got another 32 minutes to go on this hourly candle, which will reflect all of Wall Street too, but it's still bullish. Okay, we're trading up here at spin top. If you go on the 5 minutes, this is what we got, a flag right here. If you want to trap all this garbage at the all-time high right here, it's still a bullish flag. We could get an explosive market open, continue to squeeze short sellers who are trying to maybe short NASDAQ over the weekend, and they're going to get caught with their pants on fire over here. So if you look at the 5-minute trend, it's clearly showing us it's still trending up. Okay, this is the squeeze possibility, and to squeeze any pullbacks, maybe we entertain a buy here, here. The lower we go, the deeper the depth of market, the better the discount. But now we can watch NASDAQ, 90 more seconds. There's my daily candle, opening price, low of the day, highest all-time high, we're right here. 9 and 200 added. Let's bring these two side by side. NASDAQ to the right, US30 to the left. Check your spreads. I got to do it really quickly because I was just trading gold. So I got to move from gold. I got to move to US30 now. Got to switch up my sizing because it's a different security. Check my spreads and get ready for market open, okay? If you guys are trading gold, holy smokes, look at it. Just continuing to drive, okay? So now it's trading in that big zone, and your target now is that yellow line 36.57. So holy, anyone still holding this, that's about 140 pips. My goodness, guys. Congrats on gold if you guys got it, okay? Let's watch our indices over here. Good luck to everyone. Please trade careful, proper risk management. It is Monday morning. Don't do anything silly. Still early in the week, okay? Try not to blow up your account on a Monday. It's not the greatest thing to do. We don't want to do that. We don't want to blow up accounts ever, but not the start of the week. Okay? And if you guys got a minute, seconds. Hit the likes on YouTube. We do appreciate it. Okay. And we can either just trade right out of the gate, or we can be patient. We can wait for the first 5-minute candle to close. We can watch the first 15 minutes. It's going to be a lot of volatility coming right off of the weekend and market opening. So US 30 is taking a little bit of a dip right now. Let's see what type of reaction it will have at this yellow line. NASDAQ is right at that all-time high. Here we go, guys. Wall Street market has opened. The opening bell has rung. Okay, so NASDAQ, new all-time high. Will it be a lot of securities have reached 52-week highs? Alibaba, Alphabet reaching an all-time high, 245. Google. Lots of securities are hitting all-time highs right now. So NASDAQ is continuing to go. US 30 took out that daily point of interest, testing the highest point of the day. Okay, so you can definitely trade this if you like, or we're going to be patient and we're going to wait for the 5-minute body to close. That's a big move. You know, if you're pipping and dipping in the first minute or 30 seconds, some scalpers do that, but other traders are waiting for the first 5-minute closure. So it sucks because sometimes you're going to miss out on a big bullish move or a bearish move, but you got to give yourself guidelines. You guys may possibly be in a buy already and the market is going in your favor. That's great. That's where you kind of maybe want to start to reduce risk. These are big volume-based candles now. These are not small candles. Like, look at the range of US 30, guys. That's, if you just measure the entire range of that candle, it's a lot, okay? That's a almost 80 pip candle, okay? 80. So if you're trading this real tight with this volatility with a 20, 30, 40 pip stop loss, you possibly get stopped out, okay? Unless you can react quickly. Sellers that are selling, you know, when that big bullish candle probably stopped them out. And then the buyers that were buying, this big wick coming back down could have possibly stopped them out as well, okay? And you and I, well, myself personally, not you and I, I'm waiting for first 5 minutes to close. Okay, look at that. Now it's a bear shooting star coming all the way right back down. So they faked out those buyers right up exactly at that daily high, the purple line, and dropping it all the way right back down. So now will this bearish volume close below this daily point of interest, or will it come right back up? Sherry, wow, you're up 3% today. Whoa, that's a great start of a Monday, Sherry. Unbelievable. De-risk now, maybe just trade with like a 0.25%, Sherry. You know, test out a few more things. Maybe lock in 2.5, 2.75 for the day and walk away. Wow, okay, big push down while NASDAQ is continuing to go. Eldorado Gold hit 52-week highs. Those were those gold securities we told you guys to have at your watch list. Eldorado Gold, Eris Gold, Silver Core Mining. Yep, nasty is pumping. Tech is continuing to drive. Guys, there's that. Look at what we just basically kind of hit. 24,198. So 2 points away from that 200, okay? You know, that psychological 200 where I originally had it, and then I bumped it up to 250, but right there's 200. Crazy volatility with US 30 right now, okay? NASDAQ is just clean, bullish move, breaking through there. Okay, we have 1 more minute to go now. Okay, so our first 5 minutes of Wall Street is going to close now. We saw a nice big bullish open on NASDAQ, make that new all-time high at that, very close to that psychological level, 24,200. Got a wick getting rejected. US 30, it's been a roller coaster so far, where it opened very bullish, got rejected, came back down bearish, and now, you know, it's a spin top with a lot of indecision. I still might have to wait another 5-minute candle. Okay, there's too much going on with US 30 right now. NASDAQ looks a little cleaner to me, in my opinion. Tesla's up 7.5% to $425 a share. Okay, and here's the close in 10 seconds. Okay, so it's closed below the yellow line. So now that yellow line is support resistance. Open bullish coming right back up. So let's see if maybe they reject the move to continue to sell US30 back down. Okay, let's see if there's a sharp rejection, come back down. Okay, sharp rejection right there. So if we lose our ignited open, this could continue to fill that wick and drop even further down. So now it's refueling itself, coming back up, filling back up. Again, they rejected it back down. Okay, so the volume you see is still below that yellow line. Get ready to see maybe if they continue to push it down to the downside. Maybe NASDAQ will sell that all-time high. This could turn into that shooting star candle. Okay, there it did. Now it's coming back down. Okay, back up. Watch one more now. Push down, blue. Relative to that yellow line, still below it. Okay, now let's see how it reacts to the yellow line. Back above it. Buyers are still in control of this bar. See if it breaks that high. Okay, so I'm also now following this volume, waiting to see how high it goes, how low it goes. Will it close and go back below again? We're having a little volatility towards this yellow line right here. Did you guys get signals on NASDAQ? Yeah, sorry, I was dissecting this and I didn't see it. Sell NASDAQ at 132. Okay, 132. Below here, below the green zone, looking for sells on NASDAQ. Okay, so how many times have you seen US30 get rejected at that yellow line? A few times. It could come down bearish again and start to push down. Okay, so but still got that blue volume. Now, remember, the offers are like offering up there. There's the push. Okay, so I'm going to go into sell. I'm entering. I notice how many times it got rejected. So I'm looking to fill that wick and drive down to maybe the next daily yellow line, right? So I'm going to sell on US30. Let me get my ruler, measure it down for you guys. To come down to that yellow line is approximately 35 pips down in there. Okay, and then not too far off of our purple low of the day. So my stop loss, I'm going to place it above the white line up there. I know that that's hourly resistance up there. Okay, if it can drop that 30 pips, I could go right away and reduce my risk, but my stop loss will be just above there. Okay, guys, like if you want to reduce your risk while you're in this, that's fine. But right there's a target, that yellow line. That's when officially 30, 35 pips, you could go to a break even and learn how to maybe potentially scale out of Wall Street. Okay, because if we can break this yellow line, we got our daily low purple line. Okay, but we got a lot of buyers down there that maybe want to buy at that yellow line. Okay, right there's the push to the yellow line. Okay, so please, guys, I measured it, 30 to 35 pips down there, okay? You don't always need me to verbally tell you guys what to do, okay? These are fast-paced markets. And then we have one more minute to go into the close. Okay, so let's see. We got lower lows, lower highs, lower lows, lower highs, lower low. Okay, again, if we're following this volume and we can close below that yellow line, we can make that yellow line resistance to take us down to that lowest point of the day. Sellers are pushing it back down. They offered. Again, you got another attempt if you never got to a break even or to take some profit out. It gave you a second attempt. If you're still staying with the volume, then we got to watch it. Here it comes down, could potentially break right now. There was another kiss of that yellow line. Allow you another 3 attempts to pull your stop loss down a little bit, decrease risk, potentially take out if you like. I trade to targets, but I kind of want to teach here too, but there it goes. Okay, so now I'm going to a break even. Now I'm reducing all risk. We broke that yellow line. So worst case scenarios, I'm up 30 pips in profit. I give it back to the market. But I have no capital. I got nothing of my account at risk. Okay. So now it's just watching this body close. Hopefully can get more offers down here. Maybe get one more bearish bar. But I know, yes, it could come back up. It's trading Wall Street. 30 pips is nothing, you know, so I could give it right back, but I don't want it to curl back and be a bullish candle, and then I'm down 30, 50 pips up there. So it closed, bullish, ignited. Quick rejection right there. If I can get that quick rejection at 50%, if not, it's a break even. Okay, I'll verbally let you guys know as soon as I get stopped out at break even. Still in this, still holding it. There is a wick. They're pushing it down, pushing it down, pushing it down, pushing it down, pushing it down. Still got that bullish ignited candle open. It's pushing down, pushing down, pushing down, pushing down, pushing down. Oh, come on, break that ignited open. Come on, come on, come on, come on. They're holding that ignited open. They're holding it. They're holding it. It's getting down there. Oh, my goodness. What a war we have down at 850. It is a big battle down there. They're still holding all of this buyers down technically. Wow. Okay, this is a big battle of this candle. Holy shit. If they can take out this ignited open, we could definitely fill back that wick and take out that yellow line and maybe travel down to lowest point of the day. So buyers are trying everything in their power. There's the flip. We flipped it. Okay, shooting star candle pushing down. Now, I stayed in that by just a hair, guys. I'm telling you, I'll verbally let you guys know when I get taken out. I'm in this. I'm still holding it. And we're taking out that low wick right now. There we go. Wow. Okay. So if we can come down. Whoa, whoa, whoa. There's 40 pips. We flipped that candle properly. Shit. That wasn't too bad. Guys, I'm going to take out 80% down there. I'm a happy camper. Taking out 80%, leaving 20% running. Man, got to reward myself for holding that thing. So I grabbed 80% on the break of that wick. I got 20% running right now. You got it, your friend? Nice, bro. Let's see if we can come down to the lowest point of the day now. Wow. Guys, hopefully I you know, I will verbally let you guys know when I get taken out. Sometimes my broker trades a little different than TradingView. So, you know, candles are pretty much same, but numbers are different, okay? So I hope I helped you guys with that. I went to maybe a possible break even too early, but regardless, still, they didn't tap me out. That's why I don't like telling market makers my positions too much. We're followed on this channel by a lot of brokerages. They want us to promote their brokers. We don't. We want to keep everything kind of clean. We don't want to promote anything. We want to promote our education. Guys, wow. And if it comes down to that purple line of the day, you're hitting the daily low. You flip the daily candle into a bearish pin bar shooting star. Guys, that's 60 to 65 pips down in there. Miss Jones, she is beautiful. I love her so much. Oh, I had to think over the weekend because I was trading NASDAQ last week. I had to go back to my sugar mama. I had to go back to sugar mama. So she gave me the sugar right here. Here's my sugar, guys. My Sour Patch Kids. So I can go buy some more candy now with those pips I just made. Okay, so guys, please do something. You know, whatever security you're trading. Guys, this is a tip. Whenever you're trading a security and you're coming down to the lowest point of the day or the highest point of the day, you should be doing something regarding managing your risk, maybe taking a little bit of profit out there. Yes, it could technically continue to break down further, but sometimes, how many times on this call have we seen it come down, hit the purple line, and then curl right back up, okay? So this is US 32, so these are bigger than 20, 30 pip moves, coming down there at 60 pips. You know, 60 here, and on the gold trade, holy shit, look at gold. Like, gold was kind of maybe a weekly goal for some of you guys. There's 250 pips, guys. Man, that could be your Monday to Friday goal right there. Remember, we hit it from down in here? Holy shit. Wow, excellent, guys. Shout outs to Dave with the signals, holding it down over here. Perfect, guys. So that 36.46 just needed to get that COMEX volume and that news, and we're busting up on there. So excellent, guys. Great session so far. X-Red Clues, you just passed an evaluation on gold. Congratulations, brother. Well deserved, man. Okay, so you see how we close with volume below the yellow line now? So it opened ignited. Like, buyers are trying every single bar, opening it ignited to continue to push up the market. So if it can get rejected, again, 50% of that bearish candle, you know, you get your cut candle. When price gets too high, we got to cut it, right? And if we can cut this thing, you see how bullish it is, still coming back up. So guys, that would be a break-even point, but you notice how I took out 80% on that push down, okay? So I still have my 20%. I'm okay with letting that run, but the bulk of the trade got taken out on that break. That candle almost got me. Remember, I kept telling you they're pushing it down, they're pushing it down, pushing it down, pushing. As soon as we broke that ignited bar, that's what dropped. Again, same situation, open bullish ignited. If these sellers can continue to push this thing down with lower highs, and push it back down and flip that candle, and it could definitely fill that wick and take out the lowest point of the day. But that's the importance of recognizing what a bullish ignited open is, bearish ignited opens, why it's important if they flip that body, what it means to the point of control of that candle, okay? So again, I'll verbally let you guys know, there, they got me on that one. I got stopped out right there. So my 20% is not gone, but I have no risk. Okay, so my first gold trade, I retained those profit. This trade, I made some profit by taking out 80%. So I'm well on my way for my daily goal as well to start off. But I'm not giving anything back to the markets, right? I don't want to do that on a Monday. Monday is a good confidence builder to get you started for the week. Anytime, any of you guys are up way more than me in the Zoom. Walk away from the markets, guys. That's it. You did a fantastic job. You know, you clocked in, you clocked out of work. You did your job, daily goal. Now go enjoy the beautiful day. Go for a walk. Go enjoy the sun. If it's still warm where you're at, go enjoy it. I'm going to enjoy the sun. I can't wait to get out there. It's about 22 degrees, and I want to go enjoy it as much as I can because it's going to get very cold here soon. So, friend, you were in there with me too, so you probably saw that wick too. Man, it's fun, guys. I'm having a blast on this YouTube. So thank you guys to everyone subscribing, liking. You know, you got our passion ignited again, like an ignited bullish candle. We've had a couple strikes at YouTube against us, but we want to continue growing it as much as we can. Hopefully we don't get shut down. YouTube's not ready for the world financial education we're going to give. But you see, guys, what goes up can come down, okay? So let this be a lesson. If you didn't take anything out down there, a lesson. This is lesson time. You know, the markets sometimes give us a lesson. So you see how it came down, bearish, 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 down to that purple line. Had you not done anything, look at now that bullish ignited candle coming right back up. So this could come all the way back up, close above the highest point of the day, and then US30 is turning bullish again. Okay, so right now you got NASDAQ consolidating right over here, bullish, bearish, bullish. You can kind of flag it if you like. Right now we're in this flag, and it could continue to be a bull flag breaking out of here. Okay, so that's why what goes up can come down, and what goes down can come right back up. That's why, guys, I've learned not to be greedy in these markets. I tell you guys this on a daily basis. Some of you guys say to me, Ron, why did you take out your profit so early? Because situations like this happen, and they happen multiple times. It sucks when it happens to you, but that's why I always remind you guys, the number one thing when you go up 30, 40 pips is to take your stop loss, go to break even. Next thing to do is take out partials. Have a routine. I hope that this weekend you came up with some style of trading or a plan for yourself. Some traders take 50-50. They'll take 50%, leave 50% running. Unfortunately, if that was the situation, your 50% would get triggered, but at least you took something out. I trade 80-20. That's my rule. It's always been my rule from day one since I've traded, since I learned how to do this. I want to take the bulk of my trade, 80%, at at the lowest points because I'm a scalper. I know sometimes these could be 1 minute candles. You're up 40, 50, 60 pips in a couple minutes, and then one minute candle comes all the way right back up. So it's demoralizing when that happens, but that's why trading is compounding, ongoing compounding, building your capital. Who will fault you for taking money out of the markets? If someone faults you for taking money out of the markets, those people are crazy, not you. You know, when everyone says, I've never heard of anyone complaining about making money in the markets, taking money out. How do we make that into a negative? Yes, we could have got better areas to take out profit, but I've never heard of people complaining taking money out of the markets. That's why we trade. I don't trade just to watch candles and just hope for the best. No, when I take trades, I look to make money, hopefully hit my daily goal, and go eat sour kids in the sun. So we'll continue to watch. We came down right inside here again. So we're kind of consolidating still. NASDAQ has not broken down. It's been cool off, but continuing to drive to new all-time highs. Remember this target. We passed 200. Next psychological big one is 24,250. Okay, that's your target for NASDAQ, 250. We'll see if US30 can return back to the highest point of the day or come back down. Okay, so this looks like, again, if you're just recognizing patterns, we got one leg that just came down. We were in that sell leg, and now it's coming right back up. So will it come back up? Will it go back down? Will it, you know, like just go through your pattern recognition. If you're going to continue to trade after 10 a.m., let's look. Do we have any news coming forward? We have the ECB President Lagarde speaking later today at 2:30, but we don't have anything concerning U.S. news. Nothing going on with earnings today, so it could just be a traditional move in the markets on a Monday. Again, it could just, wow, Nasdaq is explosive. My goodness. Oracle is up almost 5%. Holy, okay. Micron, all-time high, 1.62%. A lot of green in the market. Amazon, Tesla, Apple, SoFi Technologies, SMCI, JP Morgan Chase, Adobe, Intel Corporation, all in the green. Goldman Sachs, financial banks are in the green. PayPal in the green. Shopify in the green. Lots of green, green, green. Okay, if you look at your heat map, there's a lot of green going on. So maybe today it's best, you know, to mark your locations and buy pullbacks. Okay, it might be one of those days that is continuing to trade high. You know, RSI is probably screaming to sell, and if you're selling, you're getting squeezed right now. I wouldn't be looking to sell unless structure breaks. You get maybe a second top. Second top is the bigger move down. I don't see two tops. I see one top come up, break out right there. It came, didn't close below for a second top, continue pushing up. Okay, so you got to be very, very careful to short these things. Could be one of those things. Monday and Tuesday continue moving up bullish with minor pullbacks, and FOMC could be a sell the news event. So, you know, just watch how they're engineering these moves on a daily basis. Okay, guys? So notice what I have done on US30. I haven't changed the color of the zone yet because we impulsively broke and we closed right above it. So we didn't close above or below. We're in it, still red. It did pull back bearish, still pushing back up new high. So if this bar closes above, again, this red zone, I'm going to make it green, maybe build off of it to the daily high, maybe a further breakout. I'll get rid of this white line now because now bigger volume in the markets. We'll watch up to the yellow line. If it pulls back, you know, today if there's a double bottom, you could already locate right there, those bodies to the lowest point of the day. You can start your green zone, stretch it into the future at some point later today. If it gets down there, maybe we'll be looking to buy here. You can now go backwards, go backwards, go backwards, go backwards. You can see then how it came in there. That's what started the uptrend today at 8 p.m. futures market. You can see when we came in here, back up, came in here, back up, came in. So Wall Street brought us all the way down there. So it's a great idea to take some profit out at the lowest point of the day. And now it's returning all the way back up. If it ever comes back down later today, you could set yourself up with an alert in there to watch that. Could be the double bottom down in there later today. Oh, guys, I got a big headache today. I don't know why. I woke up with a migraine headache, and my head is like, there's someone like in my head hitting me with a hammer. I got a really bad headache. I'm still trying to get through this session with you guys. If you guys can leave us a like and subscribe to the channel, let's see if we can get up to 85,300 today. We'd really appreciate that. Psychological level, get it up to 300. And so we can continue to be here too. Tammy, you got the same headache too? Me too. I got a migraine right here. I was on the charts all day yesterday, and I think that's what caused it. Staring at the computers all day, guys, can really take a toll on you. That body closed above, so go red to green. Make sure you guys are taking care of yourselves as well, please. Get a good, comfortable chair if you guys are going to sit at the computer for multiple hours. Your back, your neck. Try and keep your posture up. I know it looks stupid if I was to stay up like this. You guys are probably wondering why, but it's to keep your back straight. You don't always want to be slouched down. You'll start having neck pains, migraines. Guys, believe me, I'm at the computer 5, 6, 7, 8 hours a day. I can attest to this. Get yourself invested in a nice, comfortable chair. Learn posture if you guys can, because it'll really help you. When you have a headache, when you're sore, you're not probably as focused because you're moving around. You might be anxious to take a trade because you're in pain. You want to be comfortable when you're trading at all times, because the more comfortable you are, the more disciplined, patient you can be to wait for a trade to come to you. I know sometimes when my head is killing me, I'm sore, I'll rush trades just to get into a trade, hopefully to make some money and get out and go. But guys, please, this trading takes a toll on us. It does. It's very physically demanding. When I talk to people, they say, "Oh, Ron, you got an easy job. You just sit at a computer all day." It's very demanding. It's like doing physical work, guys. It's not easy to just sit in a chair all day and stare at white computers. It takes a toll on you. I got a massive migraine right now. It's killing me. So the markets are telling me that's enough for today. I got to rest, and then I'll be here for tomorrow. But guys, I had a great session. I hope if you guys continue to trade today, you guys now have maybe a trailing stop loss. Some of you guys might be up 1%, 2%, 3%. If you're going to continue trading, just trade with 0.25%, 0.5%. Lock in the rest of your gains. Start your week building confidence. This is a great way to start a Monday, and then we'll take this momentum into tomorrow, into Tuesday, okay? So don't be like shorting things because RSI indicator is telling you it's not time. You got to maybe wait for the market. There's one leg up, maybe one leg back down, maybe come out and then break there. Then maybe that might be a selling point. But right now, it's still going up. So be careful. Even US30 could pull back into buying zones and continue to drive back up. But gold met, Sherry, not trading today. Congratulations. But the Jays are taking a toll on me. Yeah. Oh, man. Okay, guys, that's it for me. I got to go take an Advil. My head is killing me. And sometimes when it gets like this, that's it. I can't go anymore. As much as I want to stay, I can't. I got this bad migraine headache, and I can't concentrate anymore. We hit a couple good trades. Dave sent out some good signals for us as well. So there was the gold signal. There it is, guys. So you can mark it 36.47 on your chart. There it is. That was that resistance, the highest point we had marked up all on our chart. Remember, we kind of bought down in here, built its way up, but there it is. There's the candle that closed above. Look at the potential retest right at 50%, the exact zone. So that's where you could wait for the volume close above. You don't necessarily always have to buy the next candle. It took 5, 10, 15, 20, 25, 30 minutes. It pulled back right there. You got your retest showing us that now that body close above was resistance and now it's support. You could have bought back anywhere here, place your stop loss down in here, and now you're running to a nice profit, guys. Let the trade come to you naturally. SST will help you guys with trade signals, trade setups. We come on live every day with you guys to break things down. So we're not just a signal group that just sends you signals. There is those groups as well. We want to give you everything. We want to educate you in a live environment. We trade with you. We take buys, we take sells, we trade news with you. We teach you technicals, fundamentals, risk management, emotions, how to stop trading when you got a pounding migraine headache right now. I'm telling you the honest to God truth. I can't concentrate anymore. My headache has taken over. So as much as I want to continue to trade, I got to walk away. I can't do this anymore, you know? So you guys might have these days too, and listen to Uncle. Walk away. If you got a pounding migraine, just walk away, go get fresh air, and maybe come back later, okay? But guys, thank you guys so much. Have a great day. It's 10 a.m. if you're going to continue trading. I'll see you guys tomorrow, 6 a.m. Eastern. Don't forget FOMC Wednesday. Look at our schedule, guys. So we got a big schedule this week. If you want to join the team, we'd love to have you. This is now the time to join. We're going to start increasing our education. So we're live. We have the signals all week, Monday to Friday. We got live Londons with live New Yorks, 6 a.m. to 10 a.m. all week. Dave is doing Tuesday, Wednesday, Thursday posts. Maybe we'll give Dave a break on a Wednesday, like finish up early so that we can come in. We'll start our live FOMC. So you see, I'll do a 6 to 10. I'll come back, get some rest. We'll start either noon, 12:30. We'll go till 3 p.m. because that's my max time. Then I got to go pick up my daughter at school. So that will be the FOMC. And then later that evening, it's going to be a busy schedule. We have our weekly webinar that's back. That will be 7 p.m. to 9 p.m. on Wednesday night, back to school class. We'll learn all about the TradingView toolbox and indicators, what I was just talking about. And any questions you have about indicators, that will be that session, okay? We got to have our tools ready to go back to school, right? Just like the teacher says you need pencils, markers, erasers, and rulers, same thing with us. We got to have our stuff. And guys, join our free blog. Here's the back to school blog. Our weekly market outlook is sent out for the members. And anything regarding news. Maybe we'll have another blog walking into FOMC explaining exactly what it is with those economic projections. It's a different FOMC than we normally have. And we always want to start every morning with an education, you know, so I like to do it through blogs or whatever it is, but you know, it's breaking things down so we know what we're trading into. And then we can develop bias, understand. Some people just trade news, PPI, and they have no idea what it is. We want to educate as to exactly what it is, so you know what to look for every single month. Okay, guys? Because it's going to repeat itself over and over. I told you, trading is very repetitive. It's the same stuff over and over and over. So there was gold, you know, hit some heavy levels up there. Now it's retracing back down. So also with right there, you see how we're trading now purple to purple tape with US30, came right back up, and now they're pushing it back down. See right there, guys? NASDAQ tapped into our psychological level, 24,250. This could maybe start the leg coming back down. But see how everything is attracted to these psychological levels. Learn your levels, guys. Learn your numbers too. But guys, I had a great session. God bless everyone. I hope everyone had a well-rested, relaxed weekend. And we'll see you guys tomorrow. Thank you guys again for the support. We love you guys. We can't do this without you guys. So your support helps not just us at SST, but it helps other traders. That's how by other traders hitting the like button, subscribing, it got the YouTube reach even further and further out, where we're finding more and more traders from all walks of life and all parts of the world. So we encourage you guys to just, if you get value, okay? If you get value out of what we do, and we earn your like and subscribe, that's what we want, okay? And we do appreciate you guys. Enjoy the rest of your day. I had a blast. We'll see you guys tomorrow, and bright and early, 6 a.m. Eastern. Be ready, guys. Have a great day, and also review your journal today if you can. Review your setups. Review your analysis over the weekend. Review your points of interest. Did they hit? What kind of result was it at your daily point of interest? And learn from that. Learn from it. You're going to get better and better and better. And you're going to be doing this with your eyes closed, okay? I'm telling you that. It's going to become that repetitive, okay? So thank you guys so much. Have a great day. God bless. We'll see you guys tomorrow. Thank you. I need an Advil right now.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.